This leader is provided to permit the projectionist to complete adjustment of focus and sound level before the film begins. This leader is provided to permit the projectionist to complete adjustment of focus and sound level before the film begins.
Check 1, 2. Woo, baby. Good morning. Meant to be here earlier. I had a phone call I had to take. Let's get right into it. Hang side over here. Good morning, everybody. How y'all doing? I got to put the triggers over, don't I? Give me a second here. I want to slap some ads in there. Let me look at the. I got a few things I got to do here. We've got the Senate hearing starting in 8 minutes. There'll likely be a hedge on the market. Austin and Millie defense budget. We don't want the defense budget. Silicon Valley Bank upcoming. I think that's the one we're looking for.
Was what happened here. This has led to a lot of scrutiny of other similarly positioned banks. Silicon Valley is in a more unique position because a lot of their loans were to technology companies, and the tech industry has really suffered during this kind of the tightening of interest rates and kind of.
Let's talk. A few. We got a few things to talk about this morning.
And so you also have a scenario where their loans aren't going to get paid back because they're not able to recapitalize. So it's sort of this mess where.
Give me a second here. Stop talking heads.
Yeah, and an interesting note I learned today is that California's wine industry, also a lot of wineries invested in SVB, so they're feeling the impact as well.
We got to speed this up, make sure we're real time.
A lot of
Yeah, it was people worried they weren't going to be able to pay payroll. And that was what we're going to hear from the government witnesses today is, that look, if we didn't act immediately.
Okay, we're real time now with This is Washington Post coverage.
They took over SVB on a Friday. They kind of basically put it in receivership. They're going to say companies.
I do want you to realize that we have something to talk about this morning about the banks. So just crystal clear as day.
The last few weeks, I didn't know anyone as far as I knew, who had deposits.
When these banks are formed.
Who have ended up talking to even in Washington.
Good morning, by the way.
We're pretty exposed, and it is a reminder. This was one of the.
Let me get rid of some of this stuff here in the background. I got a bunch of stuff I got to do.
Rapidly during the tech boom of the last few years.
Put the live stream up.
I want to get you on
So,
deposit insurance. That's likely going to be a theme today. Can you break down what that is, and how is that going to be central to the discussion we're going to hear today?
Yeah,
Thanks,
this is
here.
actually a pretty good American invention, and it started around the time of the Great Depression, and the idea, of course, was to give Americans, particularly working class people, the notion and the trust.
Good morning. I think I got everything here. No, that's not right. What's going on here? Oh, dude.
At the moment, the limit is $250,000.
Please.
You have up to $250,000 in account. You can have multiple accounts. So for richer people, what they often do is
close.
Maybe a bank account, a savings account, maybe in a savings
turn
account
off
with another
shortcut.
institution. They might have a money market fund account. And the government, in the case of a bank failure, like what we just saw with Silicon Valley Bank, will
technical stuff I got to do in the background here.
So that's a pretty sweet guarantee.
Is that right?
For any of us in the United
Said
States.
now.
The question, of course, is what happens if for those people or businesses that have more than $250,000 in the bank? And
okay, there's the live stream.
Bank had, as James was pointing out, a lot of what are known as uninsured deposits. So to give a concrete example, the billionaire Peter Thiel had $50 million sitting in this bank. So that's a lot of money that was way above.
All right, there's the chat. I can see your chats now. Good morning, everybody. How y'all doing?
Companies like Roku had really
Everybody's doing well?
$5 million accounts at this bank. And so the government stepped in.
I hopped into the Discord this morning. I was in the Discord last night. Discord this morning. Phone calls yesterday about the Discord. Let's see here. Okay, so there is a number one. There'll be a hedge on the market today. You have to know that, okay? There's a pretty big hedge on the market trying to keep it down today. This has to do with the Senate hearing that's coming up on banking. We also have the Fed president coming out on Wednesday for some kind of a Republican luncheon of some kind. So you've got Fed Chair Powell tomorrow. And we'll take a look at that Fed. I got some stuff for us to look at this morning. But the key point here is that we've got the Fed banking Senate hearing this morning. This doesn't mean, and this hearing doesn't mean anything. This is like a I forget how you label this, but this is meant for talking points for your constituents for election cycles and seasons. It truly means nothing. Banks don't really have systematic risk unless there's a bank run. When there's bank contagion, it is when people remove deposits from banks. Other than that, they don't typically carry that much risk in how they're set up. So as a baseline, banks only have not ever. There is fraud risk, of course. We know that banks at times commit fraud. They do wonky stuff. But basically, if they're following the rules of the law and how their charters, how they're set up, there isn't much bank risk. Even their treasury bills at some point, or whatever they have out there to cover the risk that they have with loans that they provide, services that they provide, stuff like that. Eventually, they're going to pay, right? We all know that. It's when we have a run on a bank that no one can control that, including the bankers, the Senate, the Fed, the Treasury Department. So whenever consumer or user sentiment is panicky, is there true systemic risk to the banking system? Now, so that's a key point to understand here with these Senate hearings. And the other key point as this unfolds over time would be that the reaction from the Senate or lawmakers, or possibly what could take place inside of even the House of Representatives, would be too much of a hammer coming down on these banks. We know that there needs to be banks that are going to provide liquidity for startups. And sometimes you'll actually get, it's weird. I was talking on a show a week or two ago about the Senate, and I was saying when these hearings start, the real hearings begin, you'll hear rhetoric. But what really matters is how much of a hammer actually comes down on these banks, and how, in truth, a lot of these small regional VC driven banks
whether
probably had
whether they had
more
the bank was about to collapse, they were
maneuverability
trying to cash out,
than larger
and,
prime banks
leading
in
criminal consequences
in
if it
in managing risk
but we
because of
them not
how low they had,
the political picture I saw
how little they were
in shorts and flip-flops
hedged, right? I think
so
Jay
this is
Powell even
the
alluded to this
federal government
inside
is a
of
mess, and it will be interesting to watch during this
Jay Powell
period.
even alluded to this inside of his
This guy into the
Fed
press,
funds
that
rate
was terrible.
speech that he had the other day, which I tend to agree with his take on it the other day. Was that there was more maneuverability for these regional banks. So we're going to take a look here at, well, okay, we're going to take a look at this real quick.
They did say that this is one of several. So they are putting it out there that they are not going to be done with just this. And as you mentioned, the House will also
It's looking really squeezy here.
this week. But it does leave the door open that we might see the executives.
This is the monthly trigger here.
Bank, at least maybe a letter out to them, trying to bring them to the hill. We've mentioned some of the people on the committee. I know I'll probably be listening to Elizabeth Warren, who has kind of been among the most vocal on this issue.
The hourly has now gone up.
Kind of the populist right, J.D. Vance, who we saw speak at the railroad here.
95,
he's on
92.
I suspect Tim Scott, who you mentioned, who wants to run for president, they don't have an interest to be seen as carrying water for Wall Street. They're going to be tough on the government and on the banks. And so I think you could have this confluence where it's sort of
way up here.
The populist right and the populist left, Sherrod Brown, Elizabeth Warren coming hard.
So I can bring some of these up here.
Sort of a perspective of, not representing Wall Street, but Main Street.
Yeah. And we're seeing the chair there, Sherrod Brown. He's seated. I got to look at a few excerpts of his opening statement that we'll likely hear shortly.
96-16.
He's really going to be talking to the American people and saying, we get why you might be upset about the government bailing these banks out, but he's also going to present.
And I am fascinating at what these hearings have to say today, because we are at this place in the market where
Sherrod Brown's up for re-election. Your home state.
The Fed chair knows that whatever is said in these hearings.
The big guy, the big powerful interests, and this is an opportunity for him.
396.21.
Very powerful perch as chair of the Senate Banking Committee to do that, and I'm going to be fascinated to see how he sort of threads that needle, because it's obviously his party, his administration, but how aggressive is he?
Right. And out of the witnesses, is there one that you think is really going to get the lion's share of some of the tough questions?
I think FDIC, and so Michael Barr, the vice chair of the Fed for supervision, he's doing an internal review that's supposed to come back pretty soon to basically look at what went wrong, lessons learned. So I suspect he'll get asked about
lessons learned.
To say, well, you'll get my report when it's ready. But Martin Grunberg from the FDIC, what kind of warning signs were missed? Why wasn't more action taken? It's also possible that Michael Barr from the Fed sort of throws the San Francisco.
You can see this big. Remember yesterday we talked about, do they slip us under?
And that they should have.
Remember, so yesterday it said too, they'll try to possibly sell this down into the close, and then in a low liquidity environment try to slip underneath the hourly trigger, the daily trigger. They can't get it done in cash market. And they're doing it this morning, right? They try to open us up underneath here. They can't do this in cash market. Sellers can't. We're starting up here right now. You're up. The full lever short on S&P 500 is insane, right? It's been like this for some time now. Like full lever short on S&P 500. And then, of course, what's weird? The indexes are not weird. We've seen this previously, but you'll see the stock market's actually trading a lot like almost
the investments of executives and shareholders.
A magnified basket where you're long tech, long XLU, right? You've got a basket of I'm long in high risk stuff, I'm long in high protection stuff, and then I'm slamming the S&P 500. You see the Qs go up. You see sell side on IWM, not past couple days, but generally speaking, you just selling down sectors of the S&P 500, and then full levered short on S&P 500.
For the biggest Wall Street banks. For anyone who lived through the global
Very
financial
unusual.
crisis, it's impossible not
And of
to
course,
think
no price
of
follow through as
2008.
well.
Once again,
Starting to
small
squeeze here.
businesses and workers feared they would pay the price for others' bad decisions. We're left with many questions and justified anger toward bank executives and boards, toward venture capitalists, toward federal and state bank regulators, toward policymakers. The scene of the crime does not start with the regulators before us. Instead, we must look inside the bank at the bank CEOs, at the Trump-era banking regulators who made it their mission, again, to give Wall Street everything it wanted. Monday morning quarterbacking aimed only at the actions of regulators this month is as convenient as it is misplaced, coming from those who never met a Wall Street wish list they didn't want to grant. Many who are the first to scold the regulators for their failures offer ready ears whenever bank CEOs line up at their offices complaining about out-of-control bank examiners. Remember some of those complaints at our hearing with Fed Chair Powell over the Fed merely reviewing capital just 3 days before Silicon Valley Bank failed? How soon we choose to forget. When we ask who should have known how the risks were building in these banks, we should start at the source with the executives. Silicon Valley Bank almost quadrupled in size over 3 years. Signature Bank more than doubled in that time.
And I do have some
Principles
issues
here
with
aren't
these banks
complicated.
for not
Banks should be prudently managed, should be mindful of the
hedging.
full scope of risks they face. should
That I do have
diversify
issues with
across
these banks for
companies and
not doing.
products. The committee must consider how these banks exploded in size in a way that was clearly unsustainable. Some explanations will focus on complicated sounding concepts like balance sheet, balance risk, and moral hazard, and stress tests, and liquidity ratios. Really, though, it comes down to more basic concepts: hubris, entitlement, greed, and always, always, always with big paydays at the end for the executives at the top. The CEO's own pay was tied directly to the growth of SVB. At SVB, executive bonuses were pegged to return on equity, so they took more risk by buying assets with higher yields to make higher profits. When those investments started to lose money, they didn't back down. It won't surprise anyone that Silicon Valley Bank went nearly a year without a chief risk officer. Venture capitalists fueled the bank's growth by forcing the companies they invested in and advised to keep their money at Silicon Bank. And then those same VCs turned around and sparked the bank run by telling the companies to pull their money out, creating more
Yeah, that was
chaos, more
bullshit too.
panic. Signature Bank found itself in the middle of a Sam Bankman-Fried.
I mean, there are
crime spree
legitimate
at the
things to be
crypto
said here
exchange
about what
FTX.
these
The bank let him
VCs
open
and their
multiple
banks did.
accounts, ignored red flag after red flag. It's all just a variation of the same theme, the same root cause of most of our economic problems. Wealthy elites do anything to make a quick profit and pocket the rewards, and when their risky behavior leads to catastrophic failures, they turn to the government.
I mean, some of
asking
this
for
is
help,
legitimate.
expecting workers and taxpayers to pay the price, and too often workers do. Even though no taxpayer money is being used to save these
That's
depositors,
bullshit.
I understand why Americans are angry. Even
That's a lie.
disgusted at how quickly the government mobilized when a bunch of elites in California were demanding it. People have a pretty good
Taxpayer money's
sense
not being
of whose
used.
problems get taken more seriously than others in this town. Of course, we have to prevent systemic threats to the economy, but corporate trade deals are a systemic threat to towns like I grew up in Mansfield, Ohio, and across the industrial Midwest.
Towns
So
like
it's a
I grew up
Wall-
in Mansfield,
there's a Wall Street
Ohio.
business model that
I'm one of the
rewards
regular
short-term
people.
profits over investments and innovation in workers. And those threats are not only tolerated, they've been actively pushed by the same crowd
I'm
who
one of the
this month
poors.
clamored for the government to save them. Just as there are no atheists,
Starting to squeeze up above
foxholes, it appears that when
396.0708.
there's a bank crash, there are no libertarians in the Silicon Valley.
These fucking
I hope that
politicians.
from now on, those who have no problem with government intervention
Keep on
to protect
squeezing.
their own livelihoods will think a little bit
You know,
harder about
this
what their
full leverage short is not going to
free
work out
market
for
has done
these
to
the
workers and
sell
the
side
home.
hedge funds. It's not.
Maybe
I don't know
take a
how it
look at all
does.
this and say, we don't need new rules. The problem
The only
is
thing
those
the only thing that I see with this
There'll always be
is you're not
arrogant
getting what you
executives.
want.
That's
It's going to
exactly
squeeze.
why we need strong rules.
When it
Public
does finally
servants
squeeze,
with
the resolution is typically really high to the upside,
and enforce those
historically
rules.
at least.
The officials sitting before us today know that their predecessors rolled back protections like capital and liquidity standards, stress tests, brokered deposit limits, and even basic supervision. They green-lighted those banks to grow and grow and grow. Too big, too fast. There are important questions about deposit insurance we must consider. Whether the current amount works for everyone, including small businesses whose real goal is to meet payroll.
You know, I'm going to interrupt here for just a minute. So, just back on this original topic here, you're seeing this full levered. It's like, you know, Gunlock was on CNBC yesterday, and he's basically like panhandling CNBC. I mean, I love the guy. He's a smart investor and all this, but he's basically panhandling on I mean, who gets a half an hour segment on CNBC to what is it? They're not beg packers, like beg the Fed to pay for the bonds that they bought. You know, the bond king, to be able to say, "Hey, we bought all these bonds." It would be like a retail trader saying, "Hey, I bought the dip on TLT and I expect them to print at least one time this year. I'm forcing you." I'm screaming on CNBC. Does a retail trader get to say, "Well, I've been accumulating TLT since January 1 on every low, and I expect it to double at some point this year"? Basically, what's being said. And what's funny about this is, what's funny about this to me is that yesterday on FinTwit, somebody posted the Fed Financial Stress Index. And I'd made a comment a week or two ago on FinTwit where I said, boy, this price action that I see in tech and this price action that I see in the SPY, I've only seen when we're near a bottom in the stock market, in a crash, believe it or not. So like we're either at the bottom, coming into the bottom, rounding around the bottom. You see the front running of tech. You see the legs being cut out from commodities like oil, XLF, stuff like that. And you'll see like face ripping rallies and S&P 500 pinned due to the legs being cut off of some of these subsectors. And how they typically resolve themselves is SPY will squeeze at some point to match up to the higher moves in tech. And I think I gave a date as well. I was like, I think this reminds me of like mid-March or something of 2020, the last time I've seen this. I posted this on FinTwit 2 or 3 weeks ago. And someone posted on FinTwit yesterday, got some, I think it was Cheddar Flow or someone, posted a chart saying, "Hey, have you looked at the Fed Financial Stress Index?" And so I did look at it yesterday, and I was like, whoa. I was like, let's look under the microscope at this. So instead of looking over the course of 5 years or 10 years or 20 years, I looked over the course of 2 weeks to a month, where we are right now, and then 2-3 weeks to a month in previous cycles where the Fed Financial Stress Index was on a high. And shocker, last time it was on a high like this was near the bottom of the last, every example was right towards the bottom of a stock market crash. So I'm going to assume on that note, number one is that the Fed is aware of this. This also highlights the systemic risk to a moment of where you have to trade it up, but then there could be a crash at any moment where we plunge 300 points, 200, 300 points, I don't know, 500. You can say whatever the fuck you want. You can claim. I always like this because I'm always like, price matters here. Are we getting a plunge to 1,600 or 1,400? Or are we renegotiating what that plunge is? It's always like it's 20%. I'm like, okay. No. Now it's 30%. And I'm like, okay. How short are you? Are you short for 20% or 30%? Were you short 20%? Now that we're up 10%, we have to be 30% down. So I'm assuming that there's some kind of monetary reason in the background why you're now claiming 30%. And what is that 20%, 30%? Is it 20%, 30% at 420? Is it 30% from 400? Is it 30% from 345? Where's it 30% from? Is it 50%? You know, it's like a fucking auction or something. And price doesn't seem to matter, right? It's always doom and gloom. And it was fucking doom at 345.0, and it's fucking doom at 420. And it's always 30% or 20%. It's 20%, 30%. It's 30% we're down at 345.0. It's 30% we're up at fucking 420 or something like that. It's always fucking doom. And you can never get a firm price out of anybody. And then you're like, well, fuck it. If we do, let's say it's 30% from 420. Are you telling me that I should have? I guess I should have bought the fucking 345.50 or the 3450 back in October. I could have wrote all that shit up and then came back down and bought again. So I do find it slightly comical, because then you're like, okay, or are we going to 1400? Are we going to 1600? You're telling me we're going down 70% now? Is that, you know? It just becomes absurdist. At some point, it's absurdist. So I'm assuming that they're aware of this. Now, the only hair in the ointment that I can come up with here is that they're aware of this, and it is going to matter what's said inside of these banking hearings. It is going to matter the luncheon tomorrow, and you know, like, where do we go from there? We're still in a sideways trading range. If we go down 30%, here, I'll put this back on here. I'm going to bring something up for you. Hold on a second here. Hold on one second here. I got something to bring up for you. Let me bring up the talking head again for you.
Safe and unsound practices. Recent reports confirm what we already know. Your priorities and your work with the San Francisco Federal Reserve Bank President Mary Daly, centered on climate change, an issue wholly unrelated to the Federal Reserve's dual mandate and role as supervisor. Given SVB's social and climate agenda, one must ask if SVB's investments in climate cause the regulators to be a bit more permissive of its risks. If you can't stay on mission and enforce the laws as they already are on the books, how can you ask Congress for more authority with a straight face? To that end, I hope to learn how the Federal Reserve could know about such risky practices for more than a year and fail to take definitive corrective action. By all accounts, our regulators appear to have been asleep at the wheel. In addition,
our regulators were asleep at the wheel. So it's the same thing, right? So let's look at here's the low. Here's our low. This is SPX low down here, 34.92.
I'm very concerned that private sector.
They're claiming that, or you know, bears are claiming that we have systemic risk down at 2,800 down here. This is another I guess should this be another 600 points lower? That would be like the depths of hell. 2,800 down here. But if you had bought like this 3,400, this is 3,491, and you'd bought somewhere down here at 2,800, in like 5 years or so, it's not going to mean much, you know. You'd be a genius to have bought this and to have bought this down here. Even if this is the worst that they're claiming, right? So remember, it was 20%, and now then a couple weeks ago we're at 420, so it has to be 30%. Yeah, you kind of have to stick with the program, right? If we go up here to 460, there'll be claims of we're gonna sell off 40 or 50%. Does that make sense? So it's always like doom and gloom. When in reality, You should have
But I
bought this
closed on
bottom,
opening statement.
and
Three
you
things
should have bought
remain
this bottom,
clear to me.
deployed 10%, 30% of money here,
The bank was
add
right
another
with Mr.
10, 20, 30% here, and if there's any kind of other doom, another 10, 20, 30%, and then have 10, 15% cash and be building cash all along the way. So in 5, 10 years, you've bought these bottoms. Meanwhile,
40-year high in inflation.
you're being told,
The country as well as
you're guaranteed to go here, which we haven't yet.
Thank you, Ranking Member Scott.
There's no guarantee that we go here because we haven't been there yet. Even if we were down here, you'd be better off, probability-wise, to have at least put some skin in the game here, like they did.
In July of 2022.
You'd be better off with putting some skin in the game down here. Even if we hit 2,800, even if we blast down here and hit 2,800, and you're probably more than likely going to be told, if we hit 3,200, you're likely going to be told, you'll have Mike Wilson say, not so bad. If we go to 2,800, he might say, oh, you know what, maybe we'll go to 1,400 or 1,600. So there's always like a maybe. When you as a market participant should have been buying down here, and here, in 5 years, 10 years later, you'd look like a rock star. You'd look like a rock star hitting all these. And you're kind of covering all your bases trying to buy these dips. This is that once-in-a-lifetime opportunity to get some great exposure. If you buy the S&P 500, and I'm not talking about individual tickers, but you buy the S&P 500 at 349. You buy it again at 2,800 or 3,200, somewhere in there. You're now in for what, 3,300 or something, or 3,100, and then you buy it one more time down at 2,800. You're a rock star. You're a Hall of Famer buying this stock market for generational wealth. That's what you are. Unless you're saying we're going to 1,400, 1,600, unless you're like a Mike Burry or something, and lo and behold, you've got another 10 or 15% of cash on you. You've been accumulating that 15% for 2-3 years, and you slam that down at 1,400. You've now beat everybody. You've beat the banks at that point. And while you're doing all of this, you've got panic sellers, you've got doom sellers saying, "Hey, look at the Fed Financial Stress Index. We could have like a brief moment of screaming down 300-400 points in here. It could be like really horrible. Like, you just wake up tomorrow and we're down 200-300 points tomorrow." And I'm like, okay, so we scream down here tomorrow. My assumption is going to be I can deploy some cash down there too, and about a month later we're going to be right back up here, looking like a rock star again, looking like a fucking rock star buying this down here. Put a ratio spread on here at the same time. So I'm long from down here. I put a ratio spread on. If we go up, it pays for itself. If it goes down, I get burr. If I have more cash to buy a bottom down here, I'm just rock starring it up. So I just don't know where I lose here. I just don't know where I lose here. I don't know why there's so much panic in the market. We already know there's risk here. You don't have to tell me on FinTwit 16 million times that there might be like some systemic risk down here. So I'm just kind of like scratching my head. And I realize that it's there. And like somehow you're going to laugh at a bull for saying, yeah, I bought this down here and I'm going to buy this down here. And I got a little bit of a hedge on in case we do this. This looks like a rational market participant, not like, some fucking sell side that's telling you don't buy this, don't buy this. Oh, and it's going to do it another time down here. And you got some like guy out there or some like sub-seller like, I didn't buy this and I didn't buy this. I sold all this down here. And also I tagged this bottom perfectly. You know that they're going to come out and say that to you, some kind of nonsense, right? You know it's a lie. You know it's a lie. And I can show you how it's a lie. We generally hit bottom on May 19th. Basically bottom, May 19th. You should have bought May 19th. You should have bought June 16th. You should have bought October 13th. You should have bought December 29th. You should have bought March 10th. I mean, can you imagine who got blown the fuck out on January 1? Like, you remember when we were going into January 1? And it was, we're getting a market crash. It's going to be fucked, right? And that's not what happened, right? Came in at January 1. Remember when we were told the holiday rally is over? Remember it was like, fuck your holiday rally and now we're going to crash? That didn't happen, did it? As a matter of fact, right in here is where bears got bent over. Bent over. We're now on March 28th. You're talking people out there with millions in shorts. Millions and millions. Sell side, millions. I'm talking millions. 20, 30, 40, 50, 60 million dollars. And I bet today, right now, this morning, heading into the 31st, that if I'm short this market, 20 million, 30 million dollars, not short, but I got a bunch of fucking SPX puts for 20, 30 million dollars, and now they're worth like 10 grand. There's some asshole out there that's like, so you're telling me there's a chance we can crash it by the 31st, 200, 300 points, and I'm at least going to get my 20, 30 million back? Yeah, that's what they're doing more than likely. I shit you not. I shit you not. There's someone out there that's just lost $1 million, $5 million, $10 million, $20 million. That's like, you're telling me there's a chance before the 31st that these SPX puts might print. Do whatever you can do to make the market crash 300 points in the next 3 days. Literally. I shit you not. I know that there's people out there thinking that. I know there are people out there probably thinking that on April 1st we're going to crash 300 points so that they just get slapped in the face because they put that hedge on for an entire quarter. And right in here, it's right in here for an entire quarter. They got told, fuck you, no. You're not getting your crash. And you listen to that fear-mongering for 3 months. And if you look at the NDX, if you look at NDX, it's even uglier. It's even uglier.
At the same time, the events of the last few weeks.
Look at it right here.
What more can be done and what more
December, right? We go right into January, and look what they did. Rip face. And now they're down here, and you've got 3 days left, and they're just like, please, please, please sell before the 31st. So that's what you're hearing out there. When you're hearing people saying where it's systemic risk for crash, they want it to crash like the next 3 days. They want their puts to print. They've waited 3 months for it. They can taste it like it's just sitting there. It's just sitting there like foaming at the mouth. I bought bonds, and I'm still short, and I've got SPX and Q puts that are 3 months old, and I want to print before the 31st. So I'm going to go on to CNBC. I'm going to go on to CNBC, and I'm going to cry for my money. And I'm going to go on to I'm going to go to my bank, and I'm going to remove all my money. I'm going to rug pull a regional bank and see what can I do to crash this market so that I stay rich. Get my golden parachute. If I have to do that, I'll do that even with a regional bank. I'll try to do a rug pull. That's NDLS, not NDX. But you can see it right here, back in December. Wait a minute, I'm on the wrong date here.
While the Federal Reserve's framework focuses
Hold on here. You can see it right here. Right here, and they want this drop down, and they're not getting it. Right back here in December. Or that's October. Right here, December. That's December 9th. Oh, I get the wrong dates here. Right here. Look at it. Didn't get it. It's not good enough to say 20%. It has to be 30%, 40%, whatever they can claim.
whether such
It's
higher
like,
levels of capital and
just give me
liquidity
something,
could
save some of my
forestall the
money.
bank's failure or provided further
And it just
resilience.
hasn't happened.
We need
It
to
just
move
hasn't
forward with
happened
our
for
work to
Bears.
improve the resilience of the banking system, including the
That's
Basel
VIX
III
right
endgame
there.
reforms, a long-term debt
Just
restriction
hasn't happened.
for large
So that's all you're hearing.
banks,
And you can
enhancements
see
to
the full
stress
lever
testing
right now.
with multiple
You can see
scenarios,
it. This is rage
capture
from
the wider
sell-side
range
hedge
of
funds.
risks and
This is
avoid
rage from
financial
Gunlock
contagion
and all these other
that could
people,
result
and they're
in
just like, we're going to
institutional
sell, we're going to sell,
We must also
we're going to
explore changes
hedge,
to our liquidity
we
rules
want
and
our
other
crash,
reforms
we
to
want
improve the
bonds to
resilience of
pay.
the financial
That's
system.
literally what you're seeing here.
In addition, recent events have shown that we must
They own the
evolve our
market,
understanding
right?
of banking in light of changing technology and emerging risk. Part of the
So, I mean, what do you do here? The only thing that you can do when this resolves, typically, it's the S&P 500 will squeeze, like rip faces off when this resolves. So all you can do, if you're a retail trader, all you can do is, my point here ultimately is, all you can do is buy dips. Whenever there's a dip, you buy it. If we trade down to 345, we trade down to 3,200. We trade down to 3,600. We trade down to 2,800. You buy. That's what you do. You just buy. You buy the market. You stop listening to all this crazy nonsense out there, like pure craziness about doom and gloom. You'd probably do best to just set an alert, like set an alert at 3,600, set an alert at 3,200, set an alert at 2,800. And if we're ever down there again, you just buy. You just buy some, and you add to your position. If we trade up to 4,200, 4,300, 4,600, you buy a hedge. They're cheap. Most of them are free. I was on the phone yesterday with someone that said, he said, I feel better shorting. And I was like, that's insane. Where we are right now, all you need is a ratio spread. That's all you need. You put a ratio spread on. If we go up and slam into 420, it pays for itself. It's free. If we go up to 440, it pays for itself and it's free. You put 3 months on it, 6 months, 9 months. It's free. It's insane. And it protects you if we crash. So if you wake up tomorrow, you know, you're making you're burr printing. If you're long the market, if you're long the S&P 500 and you have that crash, two things happen. You're covered with a hedge. So you're burr printing. You're just DCAing the S&P 500. And the crazy part is, in those moments, especially, I haven't harped on this too much recently, but especially right now, like today, if we have that moment of weakness in the market, it's like a 70% chance that it's going to be for like a week or a month or a month and a half. And we'll be right back here at 4,000 or pretty close to it. By month 3, highly likely we're at 4,000 again. So even in this moment here, even in this moment where we are in the market, like today, if you didn't even have a hedge, and you were like, fuck, I own a shit ton of the SPY. I own a shit ton of, I don't know, of whatever, Apple. I saw one guy on Spin Tweet yesterday. He's like, you'll never see Apple at 160 again. I was like, they didn't buy it at 160, you fucking dote. I was like, you fucking moron. I was like, they bought it at 120 and 130. They bought it down there. They weren't buying 160 and 170. Bulls, buyers, market participants aren't buying the fucking SPY at 165. And it's funny, he said it wasn't going to 160. It tagged 165 like a week later. So I'm like, fucking wrong again. So I'm like, I don't know what to say to these people. That, like, if you're a bull and you bought Apple at 120 and we crash today, right now, next 5 minutes, we go down, you're probably going to see Apple bounce around 120. probably somewhere in there, right around 120. So, and what if it goes to $90? He said something too, yes, or he didn't say yesterday. He'd been posting this for like 3 months, and he's like, it'll be at $90, and if you want to buy it there, you can. And I'm like, they fucking will buy it there. I'm like, they'll DCA 120, they'll DCA $90, and they're going to come back in 10 years and be stoked. They're going to be happy. You know, they're going to not listen to you. And that's what they're going to do. They're going to buy the dip. They're going to buy the dip. They're going to buy the dip. And if you're a market participant, if you know what happens every decade or two, you will as well. You'll buy the dip. So that's the point that I have on all of the doom that's out there for you. I want you to realize that when you read that stuff from these perma bears or these collapse bears or any of that kind of nonsense that you see, that there's mechanics in the background. You've got the mechanics of people that were short since fucking January 1. We're trading 394 right now. And they were talking about the crash of January 1. Now we're in March 28th, and we're trading 400. We were trading 420 a week or two ago, right? And they were screaming then on March or on December 1st or January 1st about the coming market crash. 420, they're screaming about the coming market crash. When your only responsibility as a market participant, especially as a retail trader, you know, there's like some of you out there that are like, hey, I trade better as a bear, right? I understand and respect that if you're a trader that trades better as a bear. But I got news for you. The majority of retailers are bulls. The majority, like the super majority of market participants are bulls. They like to buy dips. That's what they do. They've been doing it since the beginning of the stock market, and this is the majority of people out there. So you might operate well on sell side, but the majority of people don't. They like to buy a dip. And so if you're out there and you're a bull and you're getting depressed or you're getting scared or some of this stuff impacts you, it shouldn't. It should be just another chance for you to make generational wealth. It's another chance for you if we trade down there to buy. It's another opportunity for you if you long this market to hedge it for free. It's another opportunity for you to buy a dip and to know that it's going to bounce.
Problems to the bank, and they failed to address them in a timely way. That exposure led the.
You understand what I'm saying to you out there? I want you to understand that as a bull. So all that fear and doom that spread is kind of shocking to me. You know, especially on FinTwit. I'm just kind of like scratching my head here.
Reported losses on its available for sale securities. The market reaction to that was quite negative.
There is no violently sideways. Someone just asked in chat. There is no fucking there is no fucking sideways. We fucking went to 345 in October, and you were told to buy it. So if you bought it, we're not sideways. You're up 50 points on the S&P 500 today. There is no sideways. If you bought the dips, you're up. There is no violently sideways. You're selling puts, you're selling calls, and you're making bank. Like this whole argument I guess it's FinTwit and the news. You got the bond buyers. Well, I bought the dip, so I should get paid. Yeah, you'll get paid likely this year. If you buy like the bottoms of TLT, I'm sure you'll get paid once this year. You have a high likelihood of getting paid once this year. But it's insane. You come back in 3 years, and you look at this market, you're going to say, I should have bought that shit down there. I should have bought a 100-pack of SPY. And I should have sold some calls and puts against it for the last 3 years. You know, that's what you should do. That is how you make money in the stock market. That's how you exponentially grow wealth. That is how you do it.
Senator, That was our central concern.
That is how you do it. There's no other way about it.
Suggested from the sequential failures of first Silicon Valley and then
So
Signature.
it's the rest of it's all noise. The rest of it's all fucking noise. If you buy a 6-month or a 3-month out hedge on this market right here at 400, you are going to trade outside of a range. Let's look at SPX really quick. One more time. What if we go sideways? Was a question. It's a fair point.
So you're saying the actions taken were the least
When we trade
bad
sideways,
small businesses and across the nation, if you hadn't acted,
we already know
you think there would have been a
within
There would
statistics,
have been a contagion, and I think would be in a
using
worse
statistics,
situation today.
that if we have a sideways market,
For the,
we are going, if we're range bound,
economic system that
right?
regulators,
You're going to have
Republicans,
moments
all
of
across the board,
trading outside of that range on the downside
I do agree with
and on the upside. The longer we trade in this, well, there's two things. Two things. If we're sideways from sideways market, we'll trade outside of a range, right? We have like a spread here, right? We've got a bell curve, and we stay within that range most of the time. And we have moments where we trade out of that range briefly. That's up and down. Another thing that we know is that as time passes, our stock market,
Thank you. And if you
on
can
average, I
understand
looked it
what
up
we're
last
doing,
night because I
we're going
posted last night and I said on
Super
Fintuit, I go,
Bloomberg,
we're kind of
FDIC
fucking due for a
announced
face ripper.
SVB and to First Citizens Bank and Trust from Senator Tillis.
I said, we're due for a face ripper. And I looked it up last night. And sure enough, they said every 3 years on average, no matter what is going on out there, we have a bull run. And I mean like all-time high bull run every 3 years by year 3. And we started this silent bear market in, believe it or not, December of 2020. So we have December of 2020, right? We got 2021. We got 2022. We're now in 2023. So statistically speaking, we should hit all-time highs this year at some point by December. Statistically, we should at some point this year hit all-time highs. That means going all the way to fuck back there, right? All the way to fuck back to 2021 in the SPY and hit it. Statistically, it's on your side. And people on Fintuit last night said, well, that can't happen without, unless there's something we don't, or they didn't even say something we don't know. They just said, that can't happen in current conditions. And I'm like, oh, it can. Anything can happen that could make this market go to the moon. All kinds of events could happen to make this market go to the moon. Some kind of shift, anything. There's an election could happen. There's all kinds of stuff that could happen to make this happen. So in all the doom and gloom we're in right now, you're like sitting here with this cloud over your head, and let's say we hit a bottom and we go to all-time highs all in 1 year, even by mid-2024. And meanwhile, you're just like kicking a can down the street with a storm cloud over your head, and you just missed it. And I was saying this too yesterday because I had already looked at the VIX divided by the SPX, and I was like, man, I'm looking at every time that the sell side gets run the fuck over at some point. And so this was like a month or two ago. I was like going through it. I'm like, I can see right here where sell side got run over, like straight run over. Like I'm selling, right? I'm selling. And they get their faces ripped off. Not only do they get their faces ripped off, prime banks get their faces ripped off. If you read that book, Hedge Fund Market Wizards, they'll even tell you that size, volume doesn't come into the market until the ass end of getting run over. The banks typically come in like, if you look at when the banks actually entered the 2020 market, they came in like September in size. Like they came in the ass end. The entire time they were saying, fuck no, fuck no, fuck no, fuck no. We're not going to all-time highs. And then at the ass end, they jumped in. So you're going to hear them tell you no here, no here, no here, no here, whenever it happens, whether it's this year or next, I don't know. But they're going to tell you no the entire way up. That's what they're going to tell you as they're getting run over. Like straight run over.
By the board of the bank.
And so your only job as a bull down here is to be buying these dips. That's what it is. Your job down here is buy a dip, buy a dip. You know, this isn't sideways right now if you bought down here, is it? It's a pretty good profit right here. Pretty fucking good. That's October to March. That's 5 months. You're a professional. You're like a rock star. You're better than Warren Buffett if you bought October. You're better than Warren Buffett if you bought this back in June. You're a rock star. You're a rock star. Pat yourself in the back. You put your money to work. You did great. If you bought down here at 3,600 and you took it all the way up to 4,300, you're a rock star. If you bought Tesla when it slapped $95 and you took it all the way up to 200, you're a rock star. If you bought the initial bank crash, I think I bought 3 or 4 of those stocks. Only one of them didn't print. As a matter of fact, it printed later, but I sold out of all 4. Dude, that trade was insane. If you bought the first bank crash, you're a rock star. Rock star, rock star, rock star. You're just a rock star. And so for the SPY, it should be the same thing for you. The SPX, the Qs, whatever that is. Do I think that NVIDIA is going straight up to the moon? No, but I think they're going to buy the dips every time it sells off. They're going to buy it. They're going to fucking buy it. They're going to buy it. We're running through this new cycle over here. So I guess if you're a bull out there and you're getting down on yourself, I see bulls out there on FinTwit getting all scared and hurt and fearful and all that kind of stuff. Look at him trying to sell it down. This is rage, sell-side rage right here. Sell-side rage, end of month, end of quarter. Sell-side rage. Got a little bit of a bear flag forming here on the 1 minute. Got a nice little bear flag right here. We had a bear aeroplane. We know what those are. Sell-side rage. They're gonna try to sell the market on J Powell tomorrow at his luncheon. They're gonna try to sell the market for the Senate hearing. The fact that they can't get underneath this stuff in cash market over here, they can't get underneath this stuff in cash market. They're gonna try to do it when they're not in cash market because they can't get it done. Can't get it done.
Thank you for having this hearing. It's good to see all of you. A couple weeks ago,
can't get it done. Have to scam it. There's no other way. There's literally no other way to get it down there.
I very much appreciate Vice Chairman Barr, you taking on this unenviable task of sorting this out. Because I've got real questions. Was this a regulatory and bank management failure? Or was it
no other way to get it done? Let me move this over here a little bit.
If it was a statutory failure and an additional test or activity was needed, I'm all for putting it in place. But my operating premise at this point is, if this had been not a $200 billion bank, but a $5 billion bank, that management's mistakes, not having a risk office or other items, and failure of basic prudential regulation should have caught this. We had 2 chief regulators, a state regulator that at some point, Mr.
Let me see, I got to do one thing for a buddy of mine.
And obviously the San Francisco Fed. So I'm going to be very interested in making sure we get to the bottom of this. I think some of the things you've already pointed out, Vice Chair Barr, is that the bank's business, concentrating in one industry, an industry that I used to be part of, but the fact that there was such high concentration of counterparty risk, my understanding, 10 depositors alone had about $13 billion of deposits. Again, it seems to me interest rate mismanagement is banking 101. And again, even at a $5 billion bank, this should have been called out. I also think the speed, I've often cited the fact that the largest bank failure we've seen was WAMU back in the crisis.
Give me just one quick second here.
Left that bank over a 10-day period. In this case, $42 billion the equivalent of 25 cents on every deposit, went out in 6 hours. I'm not sure at that point what regulatory structure could have prevented that. And at least from reports, it seems to me that, and I say this as somebody who used to be in the VC industry, some of the very VCs who banked for a long time at SVB may have started this run and demanded all of their ancillary companies all go out at once. So, Vice Chairman Barr, can you take us through with a little more detail, starting Wednesday night through Friday afternoon, how this happened, how we got here, and what you've seen so far?
Thank you very much, Senator. I'll start where you did, which is this is a textbook case of bank mismanagement. The risks the bank face, interest rate risk and liquidity risk, those are bread and butter banking issues. The firm was quite aware of those issues. They had been told by regulators. Investors were talking about problems with interest rate and liquidity risk publicly, and they didn't take the action necessary. They were quite vulnerable to risk, to shocks, and they didn't take the actions necessary to meet that. What happened on Wednesday night is they belatedly attempted to improve their liquidity position, and they did it in a way that spooked investors, that spooked depositors, that spooked the market. Nonetheless, on Thursday morning, things appeared calm, according to the bank's report to supervisors. But later Thursday afternoon, deposit outflows started. And by Thursday evening, we learned that more than $42 billion, as you had indicated, had rushed out of the bank. That's an extraordinary pace and scale. Federal Reserve Bank staff worked with the bank through the afternoon, evening, and overnight to try and find enough collateral that the Federal Reserve could continue discount window lending against. On Friday morning, it appeared that it might be possible to meet the outflow that was expected the day before. But that morning, the bank let us know that they expected the outflow to be vastly larger based on client requests and what was in the queue, a total of $100 billion.
I'm home alone right now, so I went to make coffee this morning. And instead of making coffee, instead of putting it in a coffee mug, I took a French press, like a huge French press, and I just poured like a gallon of it into one of my kids' plastic cups, like this big ass plastic cup. I'm such an animal. You leave a guy like me alone, and I turn into like a caveman. Even my dogs, so my dogs are with me. And my dogs are like, normally they're like happy, fun, go lucky, cuddling, playing. As soon as all the women leave, they're like savage beasts. They're like, break out steak for me too. They're like, the girls left. You should just feed us steak along with you. They're like, let's go running. I'm like, you don't want to cuddle and you want me to scratch your belly and stuff? They're like, nah, leave me alone. I'm going to go to my hole over here, just feed my belly with steak, and take me out for a run to chase down wild animals. And I'm like, okay. Even my dogs act differently. We're like a bunch of savages around here, a bunch of cavemen. It's pretty bad. I don't know how you do. If you're a single guy out there, I don't know what kind of semblance of normalcy you have behind a closed door, but I'd probably be I'd be a full caveman. Have like a big old beard, be in a bathrobe all day long. I definitely wouldn't eat healthy. Like just shoveling like raw spinach in my mouth and then a steak on the grill every night or something. Like my family makes they make like the nice spinach salad with the strawberries and the cheese and the raspberry dressing. I would just be like shoveling spinach in my mouth raw. Pretty gross. Okay, hold on a second here. We're getting, hold on a second here. Hold on. I'm getting fired up in the background. Let's go. Watch it close during work. Hold on a second. I got to see it. Do you want to come on live? We got a buddy here in the background. Let's see if he wants to come on live or not. So just a couple things here. So we've got the Senate hearing on right now. You're seeing a hedge on the market, right? We know there's a hedge on the market, right? We know there's a hedge coming into today. There'll likely be a hedge on the market as well tomorrow for Jerome Powell's luncheon that he has. So you see a hedge here. As soon as this hearing ends, should be a squeeze higher at some point. If you're looking for this hedge on the market just coming into this morning, take away the 6 here, and we'll just leave the black and the red and the white one up here so you can see it on the 5-minute. Selling it down, targets down below. S2 here at 393.64. You should have your levels already. You should already have your levels from previously. You've got a target down below here of S1. Then you've got a target down below of S2, 393.64. And you have S3 down below here. Right here. And there's one more down below. That's at, let me snap one more line down here for you. One more right there. There's an H line down below here of 389.41 for the last squeeze that we had higher back up here. So a bunch of different targets for you here. You got S2, S1, S3, and then the H line down here at 389.41. As soon as these hearings are over, you should see a squeeze up in the market. On a 1-minute chart, you can see the crossover here. There's a 1-minute chart right here. You can see the barrel plane here. You don't need me at this point to tell you what barrel planes are. You can see them right here. You can see the other one right here. You guys already know what your times are. Right here is another one. That's called the barrel plane right there in a 1-minute chart. You should see sell side come back in again. Right here at 395.51, somewhere in here. You also know about times. It's now 10:56. So bears have another 4 minutes to get a new low. You can see back here at 10:35. Watch my cursor down here. 10:35. They got a new low. And so as we come into the 11 o'clock hour, they're going to have another 5 minutes to get a new low in here. So we're coming in at 10:56. They got 4 minutes now to get a new low. Bears want to get this low by 11 a.m. or so, somewhere in here. Tag a new low down here. If they don't get this low, we'll squeeze higher into this red tag above here. I expect them to get the new low right now until the end of the Senate hearing once this hedge comes off. Let's see if he's ready. No, I haven't heard nothing back yet. He might not be able to come on. I told him I'd do this segment on Bitcoin for him today. Can see right here this nice red line. This is a rug pull. I want you to look on Bookmap right now. And hold on a second here. I'm not catching up to the stream here with you guys. So you can see this little bit of support here. That's on Bookmap down below where you're seeing from it. This little bit of liquidity here. They should rug pull this, and we should blast down lower here in just a moment. I'm not confident in this support right here. I think we're gonna squeeze down and tag this 393.64, or at least get below it. I shouldn't say it's gonna go all the way down like bloodbath straight down here. I think it's gonna go next 2 minutes at least, maybe 2 to 5 minutes. Get a new low right here. and then we'll get the squeeze up to the 5, and then hopefully we'll get back down here and hit 393. So I'd like to see right here. We'll see if they can get it. If they can't get it, we should be over right now.
We will say so in that review.
And then Chairman Grunberg, same to you. You're conducting a scope of the FDIC. Are you comfortable that you can conduct that and be transparent and accountable, or should there be an independent body looking at this?
I think there's room for both. As Michael indicated, I think it's important for each of our agencies to look internally at our supervision of these institutions and draw lessons from it. In our case, we've asked our Chief Risk Officer, who's not directly involved in the supervision process and whose role is to evaluate risk at the FDIC, to undertake this internal review.
So let's look at that Fed Financial Stress Index together.
And then there's been a lot of talk in the media about the executive salaries, about the executive bonuses, about the sale of stock. Let me ask.
We'll take a look at that together. If you haven't already seen it, we'll take a look at it together. It was on FinTwit yesterday. I think it was Cheddar Flow, whoever they are. Flow Cheddar, Cheddar Flow, or something like that. So take a look at it right now.
Thank you, Senator.
So you'll notice some previous examples here back in 2000, 2001. You'll see the other example here in 2008. You'll see the other example here in 2020. And what we'll do is we'll highlight. If you want to bring this up, it's you can Google search it at home. It's the St. Louis Fed Financial Stress Index. And we're in the middle of a Senate hearing right now, so we'll mute them. We'll keep them quiet in the background. There's two parts of this would be that the Fed knows about this. You know the Fed is telling you, the Treasury Department, the Fed is telling you that they're reassuring you publicly that everything is fine, right? Everything is fine, everything is fine, everything is fine. You're seeing also astroturfing from institutions saying everything is fine, everything is fine, everything is fine. Specifically, like governmental institutions. You're seeing sell-side hedge funds, bond kings. They're going to tell you that everything is not fine. You're going to see any institution, like a bank, that short this market or hedge this market, are going to rug pull regional banks, any kind of investment they have in those. So let's say I was a big bank and I was long KRE or regional banks of any kind. I'm going to rug pull that shit, right? I'm going to try to trigger a market crash. When you hear these Senate hearings and they're telling you that it's all the VC's fault, yeah, some of it's the VC's fault. But I bet if you look at who actually took their money out of that stock, I'm going to guarantee that it was sell-side institutions, sell-side banks, like prime banks that were long regional banks. This is a concerted effort, not from VCs. This is a concerted effort from someone that's long bonds, someone that is wants the market to go lower, right? And then you've got the Fed and the Treasury Department that they don't want the one thing that's dangerous to a bank, and that's a bank run. So they're going to tell you everything is fine. When if you look at this report here, this chart here, it's not fine, right? We can tell that it's not fine. And I'm gonna left click here and just highlight this zone right here. And there you go. It pops in. This is 2021. 2022, all the way over to 2023, and you can start to see that we're at 1.5746. This is the financial stress index for the banks, and you can see that it's rising, 1.5746. If you come down to the bottom of your chart here and you move this over, and you look closer, let's just go to 2020. Let's just go to 2020, the 2020 crash. Oh, this is another thing that I find fascinating. I see people out there say, well, I'm looking at 2000 and 2008 but as a crash example, but not 2020. because it was an abnormal crash, but yet everything we're going through right now is pretty much associated with 2020. So I don't think you can discount what happened in 2020. I don't think you can. I think everything we're going through right now is directly related. Well, not everything. Maybe like 70% is directly related to 2020. We were already due for a recession and a crash in 2019. We knew we were looking towards that heading into 2020. But we had a crash in 2020, and a lot of what we're dealing with right now is related to that. And this is pretty much the same as 2000 and 2008. Now, with that said, you can look right here. See if I can bring this up. So you got March 6th, 1.31. March 13th, 3.34. So right around mid-March, like first week, second week of March, on the Fed. And there has to be an expectation that we're going to continue higher. And here's the key point here, okay? March 6th, March 13th, March 20th. Right on this data, right? The financial stress index. And so, look at this nice little squeeze now up to 395.45. We'll see if the bears can hold up. They did not get the new low. This bottom did hold, which is good to see. Now you're going to see the retest up higher, and actually this is good for bulls. We'll see if this develops and see if we can buy a dip down here. See if we can actually buy some kind of a dip to go higher here. You can start to see right now that the bear doom might be over for the moment. Now, the key point that I want to make to you here on that stress index is if you go back to 2020, right down here, this is the fifth is in here somewhere, and here is the 13th. So, and right where we are right now. So the point that's being made by this right here is we had the first dump, the second dump. This is all really fast, right? It's not taking place over a year or two. But this last little bit right here would be the St. Louis Fed Financial Stress Index continuing higher would be this last little bit down here. And so that's the point that they're trying to make to you is, hey, if this continues higher, we could be seeing this last leg take place. This kind of validates what we say, right? That if the Fed Financial Stress Index continues higher, we'll see that last leg in the market. And to expect it, right? So it's like one more example in the market that we could see that last leg down in here. See that one last rollover. Now, if you see that one last rollover in the market, though, how long does it last is the big question. Is it 1 month? Is it 3 months? Is it something where you should have sold here? More than likely not. More than likely, it's also the bottom. So you should be looking to deploy cash down there. And what you should also be looking for in the next coming days is knowing that the Fed is aware of this, knowing that you're going to have competing interests in the next few days and probably the next week or two and even possibly into the minutes. You're going to have competing interests in the story that's told. The competing interest in the story that's told is going to be sell-side hedge funds, sell-side prime banks, long bonds that are going to tell you, hey, we're in a banking crisis. We're in a banking crisis, and we have a systemic contagion risk in prime banks. That doesn't have to be true. It doesn't matter if it's true. We just need the stress to go up and up and up to get that last capitulation moved down. So you should be, hold on a second here. You should be aware of that. Hold on here. I'm getting weirdness here. Hold on here. Getting some weird, getting some microphone issues here in my ear. Check 1, 2. I thought I was going deaf yesterday. I was having air problems. It's not, I don't think it's air. I think it's my headset. I think it's new headphones. So the point here is you're going to get two competing astroturfs out there. You're going to get the Fed saying, well, if we don't tell them that there's no contagion, and if we tell them there's no contagion, no systemic risk, we can cut off the St. Louis financial stress index from going higher. If we don't do that, we know that there's another leg down coming. We know that it's in the financial interests of some institutions to get that next leg down.
As a whole, as opposed to a particular decision.
It seems to me that sounds like a distinction without a difference. If any single bank's failure can cause contagion, that threatens the system, then it seems that the bank should be considered systemically important. And so
Uncle JBJ is hilarious. He's like, didn't get that new low. No, you didn't get the new low.
When you took extraordinary steps to protect uninsured depositors, that could very well lead to increased fees charged to banks and ultimately to consumers. So I think we need to be clear about what is a systemic risk.
And here you can hear him speaking right now.
Version of that.
What is a systemic risk?
Do you agree with President Biden's statement 2 weeks ago that Congress should strengthen rules for banks to make it less likely that we will see another failure similar to that of Silicon Valley Bank?
Thank you, Senator. I think it's important for us to strengthen capital and liquidity rules. We're working on strengthening them as part of our Basel III reforms and our holistic review of capital. And I think we need to move forward with that. And as both Chair Grunberg and I suggested, with a long-term debt requirement that would provide an additional cushion in addition to capital for large institutions. That work will need to go through notice and comment rulemaking. There will be transition periods for it, but I think that is really important work for us to do, and I'm committed to doing it.
Well, let me ask you, Mr. Barr, this morning I, along with Senator Rounds and other members of this committee, sent a letter to Chairman Powell asking him to explain whether the Feds applied enhanced supervision or prudential standards to Silicon Valley Bank or any similar sized bank using the Fed's existing authority. We've also learned from public reporting that Fed supervisors began flagging problems as a SVB as far back as 2021. Now, I understand we have a lot more to learn about the facts of what transpired, both at the bank with any management failures, but I expect that we're going to see that all factored in as part of a review. So as you begin that review, let me ask you, do you agree with Chairman Powell's statement last week that from what we know, it is, quote, clear that we do need to strengthen supervision and regulation?
Yes, I absolutely agree with that statement.
Thank you for that. Now, lastly, what I would love to know, Mr. Greenberg, about as we think about should we raise the federal deposit insurance, what percentage of account holders does that account for? How much is private versus business? And what are the costs that are associated with it? So I'll just put that out there for you to submit an answer to the record because it will take more time than what I have. But the last point I want to make is we have seen a flight from regional and community banks to quote-unquote too big to fail banks.
I'm going to refresh the video.
Concentration of deposits.
Strengthen capital and liquidity rules.
What are the costs that are associated with it? So I'll just put that out there for you to submit an answer to the record because
I'll speed it up
time than what I have. But the last point I want to make is we have seen a flight from regional and community banks to quote-unquote too big to fail banks. And a concentration of deposits at a select few institutions also brings about its own risk to the financial system. At the end of the day, it seems that we are incentivizing entities to go to too big to fail banks. It only makes it
looks like WAPO is way behind.
What we want to ultimately achieve.
Let me see if I can find PBS.
Senator, I think that the goal of the actions that we took are to make sure that we have a thriving and diverse system of banking in the United States, including community banks and regional banks that are the lifeblood of many communities all across the country.
We called it. This extension, in my view, is one step. As you know, I've advocated for our country to provide not only strong military.
Well, wrong one here. Usually PBS is the fastest one.
At the end of the day, it seems that we are incentivizing entities to go to too big to fail banks. It only makes it even more consequential in terms of too big to fail. Is that what we want to ultimately achieve in this process?
Senator, I think that the goal of the actions that we took are to make sure that we have a thriving and diverse system of banking in the United States, including community banks and regional banks that are the lifeblood of many communities all across the country.
Thank you. Senator County, Louisiana is recognized.
Thank you, Mr. Chairman. Thank you all for being here today. Chairman Barr, we, the Federal Reserve rather stress tested 34 banks in 2022. Is that correct?
Senator, I don't have the exact number in front of me, but that
well,
sounds,
I have your
that
report.
sounds, that
I have
sounds
your
correct.
report. It says 34. And
Now we're talking about stress testing right now. Is there financial, is there risk, systemic risk? See us squeezing now, failure to get a new low,
Silicon Valley Bank. Did you
beginning to squeeze higher now, trading above 395.61.
Rules that were put in place for transition into the stress testing. It takes a while for a firm to be considered above the threshold. Yeah. They need to have a rolling four-quarter average.
Did you stress test Silicon Valley Bank in 2022?
No.
Okay. Silicon Valley Bank had $100 billion, more than $100 billion in assets at the end.
Currently squeezing up to the weekly trigger, monthly trigger, excuse me.
Senator, as I was explaining, that the transition rules in place at the time require a rolling four-quarter average to be above that amount.
Okay.
And then if the firm happens to be in a year that isn't the year that, since it's an every other year test, that a test is running, then it waits till the next year. So for Silicon Valley Bank, that would have meant 2024 would be its first stress test.
So if you're a bull, what are you looking for is the point here. You're looking for the Fed and the Treasury Department and the Senate to play ball.
Was, of course, using its own stress test.
Did you have the
and make people believe that there is no.
Under our existing regulations, no. We would have to change our regulations to have
further stress to the banking
the Congress
industry
amendment
over the course of the next 2 days. And you're looking for the Fed to come out and say the same thing.
Section 252.3, isn't it a fact that we gave the Federal Reserve the authority to stress test Silicon Valley Bank?
Under that legislation, the Federal Reserve could have put in place a rule defining the word periodic,
but you
in a different way than was done.
Right, but you didn't.
Fed financial stress.
Okay. If you had stress tests, so let me
Fed financial stress index spoken about in the Senate this morning.
2022. It wouldn't have made any difference, would it?
I don't know the answer to that question.
Well, you didn't test for Silicon Valley Bank's problem. I've read your report. Your stress test, you stress tested these 34 banks for falling GDP, spike in unemployment, and defaults in commercial real estate. Isn't that correct?
Yes.
And that's the next big one for bears is going to be commercial real estate. You'll see the Fed and the Treasury come out and saying, we're going to support all of this commercial banking or commercial real estate.
The problem is inflation, high interest rate, and loss of value in government bonds, isn't it?
I completely agree with you.
So you stress tested in 2022 for the wrong thing.
The stress test is not the primary way that the Federal Reserve or other regulators test for interest rate risk.
But you stress tested for the wrong thing.
As I said, Senator, I agree with you that it would be useful to test for higher rising interest rates. That's why in our alternative scenario, multiple scenario that we put in place for this year's stress test, we do that. These decisions were made before I arrived, but I agree with you that it would be better to do that.
But it's like somebody going in for a test for COVID and getting a test for cholera, isn't it?
I don't know enough about either of those tests to know.
Yeah. Well, they're different. So all this business about, well, the amendment to Dodd-Frank kept them from stress testing. The way I see it, you chose not to stress test, and if you had stress test Silicon Valley Bank, you wouldn't have caught the problem.
As I said, Senator, I agree with you that the statute.
This is false, by the way.
Stress testing.
You can't stress test a bank run.
Implement that in 2019.
Right.
That resulted in SVB not being tested planned to be tested until 2020.
SVB though does sound like a sexually transmitted disease, doesn't it? I'm not gonna lie.
But you knew, the Federal Reserve knew well in advance that Silicon Valley Bank had a problem.
Yeah, pretty stupid, right?
Holding too much of its money in interest rate sensitive long government bonds, didn't you?
I think the investing public and the Federal Reserve, which cited it for interest rate risk problems, knew that it had interest rate.
Yeah, that's
risk.
the thing.
Nobody anticipated.
There's no actual risk. All of these bonds would cover down the road at some point.
I disagree with that.
The only you can't stress test a bank run. It's the only thing you can't do. Well, you can, and that's when you have federal government intervention.
Failed to act on those.
You didn't follow up, did you?
Senator's time has expired. I think that I sit here and watch Mr. Barr reluctant to criticize some of the moves of his predecessors at the Federal Reserve. I'll leave it at that.
Although I do agree, I mean, there's still problems with these banks.
Thank you.
These banks still had opportunity to hedge. It was telegraphed clear as day.
So I want to just start by reiterating
that rates would be raised. They knew. I mean, we can't say that there wasn't full-on greed.
I heard you say very clearly, Vice.
There's like layers to this. It's not just one thing. I guess my point here. It's not just one thing. There's layers to the greed and layers to what the intent of the impact
and regulators
is.
took strong and decisive action to protect people and to keep our banking system.
Who stands to make money here? And you can see the different layers of who stands to make the most money here.
Extraordinary actions were called for in the moment. And you, of course, don't want to have to use extraordinary actions. You want to be able to rely on banks to make good decisions and to protect their shareholders and to protect their depositors. But let me just clarify one thing before I want to follow up a little bit on Senator Kennedy's questions. The Fed, under the previous Vice Chair of Supervision, put into place rules that I think there's a question about whether those rules, I mean, I think even in the moment, you were critical of those rules. Is that right?
Yes, that's correct.
And so your review will take a look at what would have happened if those rules hadn't been in place, and then you can make decisions about what new rules need to be in place to protect from this kind of extraordinary situation that we saw with these two banks. Is that correct?
Yes, that's correct, Senator.
So I think that's just important for us all to understand here as we think about what has happened.
I caught a bad case of the SVB. It's using everywhere.
It appears of management failures at many levels, all coming together at the worst possible time. And I'm particularly struck by the bank's failure to manage interest rate risk.
Hey, butthead bangers, what's going on, brother?
Last week, which is basic bank management. It's not rocket
Squeezing higher now. Got a little bull plane forming here. Should see a retest on the downside here in just a moment.
We're near zero for more than a decade, and a lot of business models, it appears, including Silicon Valley Bank's business model,
squeeze up to the top for the daily trigger.
Free money, and that obviously presents risks when that changes. So I'm concerned.
Come up here and see if we can get some confirmation for a move higher here.
Other institutions, banks and non-banks alike, how they are managing what must be similar interest rate risks. Could you just address that? And talk about how the Fed right now and others.
We'll look at the 5-minute chart really quick here for you.
And what that tells you about where we need to do differently.
Thank you, Senator. Let me just start with the
target here at 396.06.
The banking system is sound and resilient.
This is the hourly trigger right now.
Most banks are highly effective in managing interest rate risk and liquidity risk. It is the bread and butter kind of work of bank management. So we are monitoring the financial system, monitoring the banking system. We're looking at interest rate risk and liquidity risk across the banking system to assess that. Where banks need to do better at interest rate risk and liquidity risk management, we're pointing that out. But I think the fundamental point is the banking system is sound and resilient.
TickStrike
I might
allows
have
you to
mentioned to you when
actually
we
hear
spoke
order flow
that
in
I had
futures,
a chance to
forex,
meet
and
with a
stock
group of
instruments.
Minnesota
Get a
bankers,
free trial at
including Minnesota has
tickstrike.com.
more community bankers, I think, per capita than any state in the country, and they were eager to point out to me that their business models are very different from the business models of highly risky enterprises like
That's
Silicon Valley
bullshit,
Bank.
too.
And so I appreciate you raising that. In fact, I've been getting texts from some of my bankers today watching this hearing and wanting to point out that difference. Mr. Barr, can you talk about the risks of interest rate, sort of this interest rate risk, as it might affect non-banking institutions, as, for example, mortgage loan companies?
Ding, ding, ding.
Thank you. First, let me just,
Mortgage
say,
loan
as you
companies.
indicated, I
Commercial,
think
too.
community
Be more
bankers as well,
specific.
and I know many other senators
Say what it
have
really is.
in your home states. The vibrancy and the health of that community banking sector, and we see that too. We are obviously looking at interest rate risk as it affects not only banks, but also the non-bank sector. We look at, of course, at non-bank mortgage servicers, we're looking at hedge funds, we're looking broadly across the financial landscape to see where those risks might arise and how those might propagate in other ways into the banking system. So we're highly attuned to that. But again, I think the basic point is that the banking system is sound and resilient, depositors are safe, and we've, through our actions, demonstrated that.
Thank you very much. Thank you, Mr. Chair.
Senator Smith. Senator Lummis of Wyoming is recognized.
Thank you, Mr. Chairman, and thank you, panel. I want to follow up a little bit on Senator Kennedy's line of
Want to thank
questioning.
Twigthetics for subscribing, Mr. Raul for subscribing, Twit40 followed, Lagos followed, Smiley528 followed, GTM500 subscribed on YouTube. Amayopo01 followed.
Board of Governors may by order or rule
Blind Nest Owl followed last night. Thanks, brother. On Twitch.
Any
You can follow via Twitch. Prime Gaming. On if you're an Amazon Prime member, you can subscribe via
so that was Silicon Valley Bank.
Amazon Prime Gaming for free
You've got
on Twitch. Takes $2.50 away from Bezos and gives it to Captain Jim James.
Made mandatory.
It's free for you to sign up on Amazon Prime.
The Federal Reserve to take into account higher risk profiles presented by certain banks.
Nice little successful retest here on the bull plane that's forming.
So you look at Silicon Valley Bank. They had a number of activities with above average risk profiles. Their concentration of deposits, the quantity of uninsured deposits, 94% uninsured deposits. Then you look at Federal Reserve Authority under Regulation YY to impose additional risk-based or leverage capital or liquidity requirements or other
she doesn't even know what she's reading.
Necessary.
She's like, I don't even know what I'm reading right now.
Frank, I look at all this and I think that among all these statutes and regulations, the Fed had plenty of authority to prevent Silicon Valley Bank and the problems it encountered, and was aware pretty early on that there were unique problems there and that it was a very, very unique financial institution because of its risk profile, but didn't do it. As I look at what authority you've been given.
Yeah, thanks, Blind Nest. I appreciate it.
Another additional rule or regulation or law that you needed.
We've got a bull plane forming here.
Senator, I agree that the Federal Reserve has.
I'll show it to you right now if you don't see it already.
Through notice and comment rulemaking, the rules that were put in place in 2019.
Down here, we had a failure to make a new low.
To firms over $100 billion. There are some areas that
on the hourly we didn't get that new low down here. You want this low on the half hour, and then this low on the hour. Didn't get it.
The Federal Reserve to change
that negates
for firms
Any kind of a lower move,
$150 billion.
bulls take over,
Change its rules. What would it
start sending it higher here.
We would have to go through a notice and comment rulemaking process.
I don't mean the procedure for changing a rule.
Bull
I mean,
plane
what
forms?
changes would you make to the rule?
I guess that's a little
Senator,
aggressive.
we haven't made a definitive conclusion on that.
It's a little
We're
aggressive.
undertaking this review of SBV's failure in order to better assess whether it would be appropriate to change capital rules and liquidity rules for this size firm.
Looking for a
firms more
successful
generally.
retest here.
We're looking at that.
Come down the one and
right
start
now.
to attack this hourly.
Fractional reserve banking
And then
overly
this
risky
daily here at
in this age
396.30.
of Online banking.
Senator, let me just say
Stops
what
below
I
here.
said before, which is that overall the safety and soundness of the banking system is strong. Banks are safe and sound. Depositors should feel assured that their deposits are safe.
Well, here's the problem, though. As I see it, the way that these banks have been managed, Wyoming's community banks may end up paying for this through higher
Squeezing now to the hourly
assessments
trigger.
from the FDIC. Am I correct, Mr. Grunberg?
Well, as I indicated, Senator, in regard to these two institutions, any cost to the Deposit Insurance Fund from covering uninsured deposits is required by law to be recovered through an assessment on the banking industry.
Exactly.
If I make just one additional point, the law does give the FDIC authority in implementing that assessment to consider the types of entities that benefit from any action taken or assistance provided.
So are you saying that you're able to exempt Wyoming's community banks?
There's like
from
layers of shit
I'm
here.
suggesting we have some discretion there, and we're
There's like
gonna,
a shit
consider
pie,
that
not a shit pie, but like a shit cake.
Will you exempt community banks from having to pay for this?
That's a judgment our board is going to have to make.
There's like
And
layers
as I
of shit.
indicated,
You've
we
got golden
anticipate going
parachutes
out for notice and
everywhere.
comment,
You've got some people
public
that want the
rulemaking
market
in
to
May
burn and
to
crash because
implement
they're
the
short.
assessment. And as I indicated, we have
You've got
discretion to
lawmakers
go
that
through
want to
through
look
APA
good and don't know what they're
rulemaking
talking
to
about.
Assess?
That's the law. That's a legal requirement.
Thank you, Mr. Chairman.
Thank you, Senator Lummis. Senator Warren of Massachusetts is recognized.
Thank you, Mr. Chairman. So we just experienced the second and third largest bank failures in American history.
Squeezing high now.
Executives
396
at SVB
tag
and
on the
Signature
hourly.
took wild risks
One more
and
profit
must be
or
held
PT
accountable
above at
for exploding their
396.28.
banks. And I'll soon introduce a bipartisan bill to do exactly that. But let's be clear, these collapses also represent a massive failure in supervision over our nation's banks. So coming out of the 2008 crisis, Congress put tough banking rules in place. Now, big banks hated them, and their CEOs lobbied hard to weaken those rules. Ultimately, Congress signed off, and then it got bad, really bad. Regulators burned down dozens of safeguards that were meant to stop banks from making risky bets. Now, the three of you here today represent the U.S. Treasury and two of our top banking regulators. I'd like to know if you believe that we need to strengthen our banking rules going forward to ensure the safety of our financial system. Vice Chair Barr, let me start with you. Do you believe we should strengthen our financial rules going forward?
No.
Thank you.
You can adjust them. That's about it.
Biden agrees with you as well. 2 weeks ago, he stated that we must, quote, strengthen the rules for banks to make it less likely that this kind of bank failure would happen again. Chairman Grunberg, what about you? Do you agree with President Biden that we need to
This is a full
strengthen
scam
our
right now.
banking
This whole
rules?
conversation is a full scam.
Good. And now,
And look at him. He's sitting at the table and he's like, this is, he's like, I'm just saying yes to diarrhea.
You need to prevent these types of bank failures.
Well, I'm asking you, of course we need to prevent them, but that's not by simply wishing it. It's by stronger regulation, is that right?
I agree, Senator.
Okay, good. Now, we need better laws here in Congress, but let's also talk about
Dude,
how
this
we
line of
strengthen
questioning
the
is
rules
just-
today, even before Congress acts. Under current law, the Federal Reserve has the discretion to apply stronger prudential standards on banks with assets between $100 billion and $250 billion, exactly the size of Silicon Valley Bank. That authority is not being used right now. Vice Chair Barr, will you use your authority to strengthen rules for the largest banks in this country as you use your authority to strengthen the rules for the largest banks
I
in
don't
this
mind this
country?
part, the
Will you
strengthen
be
rules,
reaching
or like,
banks with
as long as
assets
it's not
of
a
at
big
least
hammer, it's
$100
not
million?
it's not negative.
$100 billion?
Senator, we
Like, the
of course, would need
language
to go
here is
through
not
notice
that
and
bad.
comment rulemaking,
I understand.
in this process, but I anticipate the need to strengthen capital and liquidity standards for firms over $100 billion.
This is a key part of
Okay,
this
so this is the
right
area
now
we're
is that
looking at. We're going to push down further in terms of the greater scrutiny.
you don't want to hear the
Chairman Greenberg,
hammer
let me
talk. If
turn to
there's
you.
hammer
Once
talk,
the
that's
Fed
bad.
began torching rule after rule in 2000.
So this is more grandstanding at this point. This is kind of a big nothing burger here.
FDIC, under your predecessor, joined in on the fund and also started weakening FDIC rules across the board. Capital and liquidity requirements, stress tests, you name it. In fact, your predecessor explicitly told these banks that if FDIC bank examiners were asking too many questions, that they should, quote, let us know, end quote. Now, there's a banking regulator who makes it clear that she is there to serve the big banks.
Yeah, I
instead
know.
of the American public.
Someone on
Chairman
FinTwit,
Greenberg, will you
Butthead
commit to
Bangers.
using your authority to
Someone on
undo the
FinTwit was like,
rollbacks that
"She's
your
not an economist."
predecessor
I'm like, "No, but her
initiated,
husband is."
and to strengthen the rules and
Famous one.
supervision for banks with greater than $100 billion in assets.
All-time
Senator, I think
investors.
I was a member of the board at that
I
time
do.
and voted against those measures. And I certainly think it's appropriate for us to go back and review those actions in light of the recent episode and consider what changes should
Well,
be
I
made.
have to say, review sounds a little wishy here. You didn't think they were good rules to begin with.
My views haven't changed, Senator.
All right, so you still think they were a bad idea?
I do.
Got it.
Yeah, so this guy's saying the same thing that I would say. Like, the rules are the rules are generally good right now. Now they're
rules for big banks.
we're gonna
and
mute
to
this right here because I want to talk about this. The rules on these banks are pretty good. Now, there was greed by, of course, the bank execs, VCs as well, right? And we do know that the rules need to be adjusted for knowing, hey, my hedge is treasury bonds pre rate increases, and I probably should have taken on more hedging. Those kind of rules can be put in place. There's nothing you can do, though. Be aware of that. There's nothing you can do for bank runs. And you also need to see in the background who's creating some of these bank runs. You know that these banks are already on the decline prior to the bank runs, months before. You already know that a lot of these stocks are owned by large institutions. These institutions buy bonds on lows. They need to create a moment in the market to go down so that these bonds can print. Oh, there's layers to the bullshit, is my point. The golden parachute out there is for the execs. The golden parachute is out there for these VCs, right? A nice little squeeze here in the spot of 396.09. And it's a key moment here in this hearing that you don't want to hear new structural change to the rules for these banks. You want to hear, like, we're going to adjust this stuff, we're going to strengthen this and strengthen that. And that's actually a good thing for the market to hear that kind of stuff. And you're seeing some pushback from these people that are being grilled by the Senate right now. They're just like, yeah, fuck you, we already know.
Executing this process, however, the FDIC used the system.
The other key point here is you've got the Fed. If none of these people are going to be honest with you, the Fed knows, too, that there are institutions, like banking institutions, that are trying to profit en masse off of this. They know that there are VCs and bank execs and prime banks that want to profit off of all this from start to bottom.
To trade sources calculations, Russian Urals crude prices for April loading stay below $60 per barrel price cap.
$22 billion in losses already accrued. That position just doesn't square with reality.
And so I guess if you're like, if you're just like some guy out there, some woman out there, whatever, you do want to at some point to hear. You don't want to hear the Fed giving in to these banks profiting this last leg, because that's what they want to do. They want to profit the last leg. The last leg of profit here is in the bond market.
Last time I checked, those costs that get passed along to the consumer, those consumers are American taxpayers.
It's basically a setup of fleecing, right? And it started months ago.
Typical methods of resolution, and it begs the question of why you had to invoke that extraordinary exception. Just this past Sunday's announcement of a new purchaser of part of SVB, not only were serious losses incurred.
We looked at the business cycle, right? We know that XLF, we know that financial banks out there in this cycle are bound to go down. And this is positioning, pre-positioning from institutions knowing that they can create this environment where we are currently in the market.
What was your counteroffer? And did you engage with the board of the bank that didn't approve this to get them to step up and approve it?
We received one offer that was frankly more expensive than the cost of.
I got something else fascinating for you. I saw a
offer at that moment.
Was there a counteroffer to that?
I would have to check with our staff in terms of how much of a back and forth occurred.
Let's talk about the bidding process itself. Were certain banks dissuaded by you or anyone else associated with this from bidding on SVB, either before or after the bank was taken into receivership?
Squeezing higher now into the daily trigger.
I was inundated with phone calls telling me that legitimate bidders were being waved off of the process. It's one thing
396.26 or so is the price target here.
If ideology had anything to do with this,
Let me see if they can show it to you.
Our committee is going to be deeply concerned about that. I look forward to the GAO's report on this because the result of this failure places the banking sector in a state of disarray that we've never seen before. In spite of all the preparation and tools at your disposal, the FDIC failed to do its job. There was obviously enough demand to orchestrate a sale. What it looks like to the American people is that you simply didn't feel the incentive to execute and leaned on the systemic risk exemption to buy time. And in doing so, have placed the entire U.S. banking sector into uncharted waters.
Nice, beautiful squeeze here.
And this is a disgrace. I look forward to the GAO review.
Hedges are looking for the hedge on the market was looking for a material change in the Senate's.
In response to the 2008 financial crisis, the size
See the squeeze up here in the overnight. Squeezing again, very erratic. A lot of erraticness right now. You can see it. This is abnormal.
And addressing risk to the financial system. All of this was in
You can see the tag just now above
that pose systemic risk.
on the hourly trigger. This is the weekly and the daily. Price is now trading above the monthly, the 5-minute, the 1-minute, the hourly, and now smashing and bashing into this daily. We should see at some point an even larger squeeze coming up here. We can keep price up here and allow all of these triggers to come up and run underneath. Should be able to get some kind of a blast off north here in just a bit.
Ignoring one of the most basic risks in banking.
You want to make sure that price stays above 395.60.
The day of their failure, SVB CEO sat on the board of the San Francisco Fed.
So 395.60.
Review of what went wrong in your supervision. Will you consider the level of managerial
Right here, right where we are, right here. We want to see price stay above.
Senator, the staff have
should get a nice fat squeeze. We're going to watch this retest for the next trade.
I suggested at the outside, and they're really basic. Interest rate risk mismanagement by the bank, liquidity risk mismanagement.
Right where this yellow box is, you don't want to see.
Examiners, the examiners at the San Francisco.
You want to see a successful retest down here.
Called them out to the bank, and those actions were not.
If we can get a successful retest down here, we should get a nice slam up here.
Sense of urgency that was brought to bear on this, and the sense of pressure, and if every tool at their disposal was used, because they certainly were doing other things well beyond their remit. Thank you, Mr. Chairman.
Absolutely. Thank you for your questions. I'm going to ask the questions now, if I might.
Right in here. Trade is good. 2 down here to 395. 395.
We do need to protect American consumers.
59.
Small business folks. We need to hold bank executives accountable when they screw up. And if the regulators are asleep at the wheel, we need to hold them accountable. Look, a correlation I would say is when I run my farm, if I look at the price of diesel fuel and seed, and that's all I look at. I don't get the whole picture. And quite frankly, I won't be in business long. If regulators are only looking at capital,
I'm going to mute this real quick, too. I want to talk about something else. So we were talking about business cycles, right? Past couple weeks here, and we're going to, or past week, I don't know, past week or 2 weeks, I'm not sure here, but I want to talk to you about business cycles because I found it fat. So we know down the road, just keep this in the back of your mind. We know down the road that the next big one is going to be commercial backed real estate. We already know, right? Commercial backed real estate will be the next one that the Fed will have to backstop. But I did find it fascinating. I was reading some stories this week. As a matter of fact, let's look at see if I can look at show you something here in the background here. Look at Kroger just smashing. Let me mute some stuff here and we're going to look at KRE. Regional banking. You can see the front running back here, right? You got a top here. Looks kind of classic, right? It's way back in November of 2022, right? Sell it down, sell it down, sell it down, sell it down. Need to create a reason to get some capitulation, right? We need a reason. Who sold this? Was that you and I? Probably not. Right? You need a reason to sell this, right? You need a reason. And the reason I'm going to talk to you about this, the important part about this is KRE. And you can see XLF is similar, right? You get business cycle sector rotation. Let me mute my business cycle sector rotation, right? There's financials. Right? There's financials. And look what we got here, real estate. So we know that this one is next, right? We know that one is next. We also see the front running of tech first, then discretionary. But what's really fascinating for where we are right now currently is I'm already seeing discussions about steel and industrials and manufacturing. I'm already seeing the discussion. So you're already seeing the front running of the decline, the final decline of industrials.
So Fed's bar says SVB was on notice that they needed to fix problems since November 2021, but they did not.
So right now you're hearing the discussion over, right now, like under the microscope is kind of becoming commercial real estate. And you're going to begin to see, this is like right now, this past couple weeks, you're going to begin to see a discussion over China in war, and you're going to see, hey, can we produce stuff with steel, right? Steel. Keep that in the back of your head. Steel, industrials, manufacturing. This conversation is going to take place here and go under the microscope after we get done with commercial real estate. So just keep that in the back of your mind. So you'd see something like this, like where, like instead of waiting for all this to happen already and saying, oh my God, I want you to start thinking about industrials as we head into the like front running it and the front running of it that will take place. And I'm assuming you're going to hear hearings on this as well down the road. You'll end up as soon as we're done with commercial real estate, you're going to then have what would be your next one. I'm gonna forewarn you. After we get to commercial real estate, your next one is going to be manufacturing. Right there, that'll be your next one, and so you're also going to see institutions that are going to pre-position for this. And they're going to be like, I don't know what you're talking about. They're going to be like, I don't know what you're talking about. What, me? Who, me? Worry? I don't know what you mean. And let's look at XLI real quick. This is down the road, right? It's not right now, but let's look at XLI. It's not today. Interesting though, huh? Look at that. There's XLI way up here. Looks kind of familiar, doesn't it? Does that look kind of familiar to you? We're not there today, are we? But it does look kind of familiar, right? Does that look kind of familiar to you? There's XLI. There's the peak at 105. What is that? 105.60, 105.70? Not today, but it's ripe, right? I'm going to bet you right now that there's a hedge fund and a bank somewhere going, well, don't worry, we got this one coming up for down the road. And we're going to need to create an industrial crisis a few months from now, 3-6 months from now or something. Maybe it's middle of July. Maybe it's winter. Maybe it's September, October or something. And so your next one that's going to get front run is XLI down the road. And you're going to have a Senate hearing. And they're probably going to talk about the threats from China and war with Taiwan. And can we get steel? Can we manufacture shit? Right here. Probably the car industry. Probably short some manufacturing somewhere over here down the road. Maybe it's 2024. Somewhere in here you have maybe not the full collapse. You have like the collapse in November or something, and then you have the bloodbath in the beginning of the year. Something like that. We didn't know it was coming. We have to strengthen the USA manufacturing. How did we not see this coming? Successful retest right now of the 1 in 5 minute. It's because we're in a bottoming process. We're in a business cycle bottoming process. I'm serious. I'm not joking. We'll come back to this video. I kid you not. We'll come back to this video and you remember that. So the next one's commercial real estate. They're not going to get real estate. This whole thing is fucked up from COVID. Everybody's got like a 0, 2%, 3% loan. The majority. Most house buyers right now, they're all cash buyers. The only people getting fucked here are young people, or someone older that only now has some money to buy at a high rate. That's the only people getting fucked here. It's gonna take like 3 or 5 years. Meanwhile, they're gonna run through the business cycle while all this is going on. And you'll see it. As soon as we're done with commercial real estate, we're going to go into industrials. That's the next one. So you've got some time. You could probably put like a 2 years short on XLI on a high, on a market high or something, and you'll say I called it. Not me, you. You'll be like, hey, I called it. I knew this was coming down the road. I don't know how the Senate didn't see it coming down the road. Don't worry, banks are already planning on it coming down the road. Yeah, it's already been happened. So commercial real estate's already happened. Most of these companies just do a Google search for commercial real estate stocks, like the largest ones, and they're usually like the largest commercial real estate holders in like New York City and shit. And they've already been shorted to the depths of hell. They're almost at bottom. They're pretty close. They just need that last capitulation phase. That's where I'm a bank and I take my last profit out and I rebuy that bottom again. They cycle into buying that real estate bottom. You're going to see news that's going to tell you that the world is going to end. And that last little crash in commercial real estate, they're going to go in and buy that while you're trying to sell it. I'm telling you. You can see it. You can see it before it happens every time. I just showed you XLI. I guarantee that's what it's going to look like for XLI. Just waiting for. We're just sitting here waiting right now for some of these some of these lines underneath there to catch up to it. It's just all this is right here is SPY resting bitch face right now.
For your service and testimony today. Mr. Gruenberger, you're aware, are you not, of the fact that the CEO...
We need price to hold above this 395.62 to remain valid. You're also watching time. Coming into the hour now at 11:56. We got 4 more minutes for a new high here. Got a high at 11:41 right here. Want to see one more high if we can get it. We might have to come back down and retest down below here at 395.62.
Bonuses literally hours before SVB collapsed.
Yes, Senator.
Now, I believe we need to have an independent investigation into any criminal culpability.
Criminal culpability? How about a fucking prime bank?
In this case, but regardless of any...
Like, I'm not a fan of VCs, but if you're going to go after VCs or executives of these banks, like the regionals and the...
would agree it's simply wrong for the CEO and top executives to profit...
Yeah, I think it's wrong.
...from their own mismanagement and then leave FDIC...
But if you're gonna throw them under the bus, you might as well throw the stockholders under the bus too.
Senator.
The prime banks.
Now, Dodd-Frank provides clawback authority that applies to the biggest banks under the Orderly Liquidation Authority, under OLA. But as I understand it, that authority does not apply to SVB Bank. Am I right about that?
That is correct, Senator. Could I elaborate on that briefly?
If you could briefly. Just
Very briefly. We do not have explicit clawback authority. We do have an obligation.
Turning yellow right now from red to yellow. Rug pull.
By the board and management of the institution. And we do have authorities to impose consequences, including civil money penalties, restitution, and barring individuals from the business of banking. So we can get at some of the issues raised, but
Martin
truly
is
do not
like,
have
we already took
explicit
the banks from
clawback
them.
authority. And I indicated earlier it would be
Prime banks are like, we already rug pulled them. Don't worry about it. We took them for everything they got.
in the federal
We
deposit
corporate
insurance
rated regional
in that
banks.
Well, I'm glad you raised that. I heard your response earlier, and Senator Kennedy, a member of this committee, and I are working right now on bipartisan legislation to accomplish exactly what you said. I hope we can introduce it.
Hey, Mr. Juarez, how are you?
I know the chairman of the committee is interested as well in pursuing that. I asked Secretary Yellen in another hearing last week whether she and the Biden administration fully supported it. The answer was yes. So I hope we can move forward on that piece as quickly as possible because there does seem to be a hole in your authority. You have some authorities you indicated, but there is a hole in that authority that we have to plug, and you agree with
They're
that.
like, we should have criminal penalties for these bank executives.
Vice Chair Barr.
What about the criminal penalties for the bank executives in 07 and 08?
Some guidance, in fact, a rule that was issued by your predecessor, former Vice Chair of Supervision Quarles, shortly before his departure in March 2021. And this rule established that supervisory guidance does not have the force of law, and it cannot be used in the event where it would halt banks' abilities to conduct mergers and acquisitions and that sort of thing. I fully understand the distinction between supervisory guidance and
Successful retest, trying to retest the highs right now, coming into the 12 o'clock hour. Half hour, I guess.
For this rule, according to the Fed's staff memo, that this guidance was issued upon industry request. And they specifically note the Bank Policy Institute and the American Bankers Association is submitting a petition asking for this rule to provide guidance to try to weaken the punch of the supervisory rules. Are you
Price
aware
target
of that?
above 396.72.
Yes.
See if we can actually get up there or not.
This goes into the frame that the chairman of the committee made earlier on.
396.22, excuse me.
That had been saying
Misspeaking
for
there.
months and years, let's rein in the bank supervisors, and now all of a sudden it's like, where were the supervisors? Why weren't they being more aggressive? Do you agree that that guidance, putting that into rule, sent a message that you don't have to listen to supervisors' guidance that much? And would you be willing to take a look at whether or not that should be repealed?
Senator, I'm not sure of the impact of that guidance.
Sellers trying to step in right now. They don't want to see the squeeze take place. Might not see it right now. You want to see the Senate hearing end?
About that with respect to the SVB case, whether it mattered or it didn't matter.
I'd really like to see this be the end of the Senate hearing to get that squeeze in here.
Well, I hope you'll take a look at it because
otherwise it'll be could be in a holding pattern until
the industry, and clearly the intent was to
the hearing ends.
Dombrovskis says the situation in the EU banking sector is stable and banks are prepared to withstand
provided
the
by
shocks.
the regulators. So it seems to be part of a pattern of an effort to push back on regulators' authority and then come back and do the Monday morning quarterbacking and saying, where were they? Thank you, Mr. Chairman.
Yeah, I don't think everyone hates. I think this guy is like. I think this guy's like. He's like, you know, and I know that you know that we're all making money off this.
Thank you, Senator Daines. I appreciate the opportunity.
It's like the thieves are all together.
Ask you all a few questions.
He's like, they're gonna throw me into the coals, then we're gonna go do some cocaine later after this and rent some hookers at Davos together.
Our regional
He's like, I just banged a hooker in Davos with this guy like 6 months ago, and he called me up on the phone last night and told me I'm gonna get grilled.
To our rural roads could not be understated. So I am proud of the work they do and proud of the strength they continue to exhibit. Mr. Barr, I want to follow up on a question that one of my colleagues brought up. You keep talking about the Fed focusing on the size of SVB and banks. However, 2155 also requires the Fed to take into consideration riskiness, complexity, financial activities, along with other risk-related factors.
Mikey
Tailored supervision ensures that the
Assen,
Fed
Mikey
focuses
Assen
on
is
the
saying,
most risky
how is
banks.
Tesla
You've said
chart in your
repeatedly that
opinion?
bank mix management
I
led
am
to
weekly long.
SVB's failure.
Let's take a look
The
at
whole
a
point
Tesla
of
chart real quick.
2155 was so that you could tailor your regs and your supervision to risk. So why did you not require definitive corrective action based on the flaws that you saw?
When did you get long?
Thank you very much, Senator Britt, and I appreciate
Hold
your
on here.
comments about the Alabama banking sector, which I think is a thriving sector and is contributing to its communities. And like bankers across the country, is strong and vibrant.
I.e., we didn't raid your regional your community bank. We just raided
Looking at the range of tailoring approaches the federal
VC banks.
the decision
So
that
Mikey Aston is saying, how is the Tesla chart in your opinion? I am in weekly long. Well, when did you buy? Did you buy on Monday or Tuesday? Longs, Mikey. If you're listening in on Twitch there.
I believe we have substantial discretion to alter that.
Charlie Mac 10, thanks for subscribing on YouTube. Twinthetics, thank you for subscribing on YouTube.
In that review, will you take a look at if you use
Mikey,
all
can you
the
let me
tools in
know?
your toolbox to prevent this both before
Today
and
at 200C.
after? Will that be part of your review?
Okay, good. That's thanks for saying something. Here, hold on a second. We'll take a look at it.
Steps that supervisors took and whether they should have taken more aggressive action.
So at current rate, though, you can't speak to whether or not you utilized all of the powers that were given to you.
I really would like to wait for the formal review for the staff to come evaluate the full supervisory record to make an assessment.
Absolutely.
But we're certainly very focused on that question. And
So let's look at
if we
Tesla.
do the right steps, we're going to say that.
Yes. Well, I find it concerning, though, when you all were asked, each one of you were asked, would you like to see more powers, more strength in this? Every single one of you said yes, when you don't actually know if you utilize the tools in your toolbox correctly, or if the people that were under your supervision were supervising appropriately. I think that's what people hate.
All right, let's talk about Tesla. Let's talk about a couple things here. So you're long Tesla, right? You bought weeklies. A few things here. Tesla on a longer time frame. This blue line right here. This is where sellers come in or have been coming in to sell Tesla right here. When price comes near it, sellers are coming in to sell it. They've been doing this now for quite some time. I'll show it to you in a higher time frame here. I want you to see that the major downturn in Tesla came on a successful retest of this monthly trigger, right? Blasted down. I want you to see that right there, okay? So there's like a major move down for Tesla. Price got underneath. Let me see if I can change the color of this. Price got underneath the monthly trigger. Confirmed the move lower on the daily trigger, and then made a major move down, right? Pretty severe. You see price now is above the daily, right? Very positive. Trades above, comes back to this same place where shorts are above here, and the immediate reaction is sell, right? Expected. We knew that we were actually in stream talking about it, right? I'm going to take profit up here. We expect sellers to come in at like 216, 220, something like that. I think they first came in at 214. I think you might have gotten a high at 217 at one point. So you're expecting that, right? That's the first sell down. Here's your first sell down. And you're going to be looking for price to get underneath the daily, right, to make that next move lower. Or to squeeze up and confirm that move lower. So overall, the look for Tesla is bearish. And it's bearish down to $95, and then I think it's 56 or 52. There's some gaps down there to fill. So just a base case right now for Tesla. Hold on. A base case for Tesla. Overall, it's bearish on a higher time frame here. Now, the one thing going for you is that price is above currently the daily trigger. So if you're like, hey, I'm long Tesla at 186.99, seems reasonable right now to be long here for a short weekly or day trade if trend is your friend. But for trend to be your friend, price also wants to be above the 1 minute, the 5 minute, and the hourly. It is nice to see that it's still trending higher here, right? Still haven't made new lows here, right? 1, 2, 3, looking for that squeeze higher here. So I get the idea here. But the idea still at this point is you can't break trend, right? So in a 30-minute time frame, and right now it's bearish. So even today, Tesla is bearish at the moment. So you don't want to break trend. You already know that. You don't need me to teach you that or tell you that. I want you to see that you've broken trend here, right? You've already broken trend on Tesla, and you don't want to get below or reject below. The key here is that you don't want to reject below 187.24. And I'm going to show you what that means right now. So if you were to draw a box at home on 127.24, sorry, not 127, 187.24, excuse me on that. I'll just snap a line here. Make it easy. Like if you want an abandoned ship kind of a moment. 187.27. What you don't want to see here happen on Tesla is you don't want to see price break below and confirm the move lower. So if you see price break and it comes above 127.27, not so bad. You still have some life left in Tesla, possibly going higher. But what you don't ever want to see here on Tesla is price break below and confirm that the move is lower here. And you would see the moving averages come down as well. That would be the 1 and the 5 minute. So I'll draw this out for you here on a regular chart for you, okay? So you got 187.27. We'll take a look at something else here for you in a moment. So we'll simplify it for you. So Tesla, if you had a chart at home or something, TSLA. Do a 5 minute chart here. It's Tesla. And we got 120 or 187. I keep saying 127, but it's 187. So just for today, right? This week, 187.27. Snap a quick line right here. Make it nice and fat. Something like that. Pretty simple way to do this. Right? You have yourself an EMA. You have yourself some EMAs. You got I think this is today is a 27 and a I think it's a 129 right now. These change, but for right now, what you're looking for if you're buying a weekly or something like that, what you don't want to see is price get underneath, reject, and you don't want to see this come over and this come over violently here like this, okay? Because then you'll see price come down. Now, what you want to be looking for as a bull, you don't want to be seeing that right there, right? Comes down below and starts to reject, and we start to get a violent sell-off. It's kind of like your stops, if you will. It's okay if it comes down and then comes back up to this kind of stuff. You don't want to see the rejection, though, right in here. You don't want to see that. Now, the other thing you can look at using this would be, do these flatten out or not? Right? Does this white line flatten out, or does it chase price lower? If you start to see this white line chasing price lower, that's a bad sign right here. If you see price go lower and this white line is flattening, it's an indication that it's gonna pull back higher here. Okay, if you start to see these things flattening out, these moving averages flattening out like this, you'd actually see price slingshot back up and start its move higher here. Now we'll look at some higher time frames on Tesla. We're looking at an hourly. Pretty bearish here, right? Looks pretty bad on an hourly. It doesn't look healthy, does it? If you wanted to get bullish again, you'd want to see this. You'd want to see price come above this, right? To get bullish on Tesla. This is kind of where you take a bull trade. So if you're already in a bull trade right now, I would say to you, no, I don't like it. I'm not a fan of it right here. You're just kind of just trying to buy a dip out of nowhere. Like, hey, I'm calling bottom here. I don't like it. I always like to see the confirmation first. That's where the meat of the trade is. Same thing for bears. Like this, there is no bear trade here either for me. You'd want to see, if you're a bear, you'd want to see price get underneath and then confirm the move lower. This is where the money shot is, where the real money is in that trade is right here. Right here, not right here. Danger, no danger here. That's for the bear trade. Or this is a good bear trade right here too. But you like take your money here, or you take your money underneath. If you're already in this trade bearish, you'd take your money down here, and then you'd look for this to take the second part of the trade. This is the second money shot of that trade for bears. So in an hourly, I'm not overly bullish on Tesla here. And just looking at Tesla here, this looks bearish overall, doesn't it? Like this all looks like it wants to go down lower. I'm overall bearish on Tesla. I don't like their chart versus other tech charts. I'm going to show you this too. If you want to see a healthy tech chart and an unhealthy tech chart, here's an unhealthy one. Trading below all the moving averages, all the velocity, all the triggers, right? This looks bearish to me. Overall, looks like it has more time to go down here. Only time I'll get bullish on Tesla is if price proves itself higher than all of these averages. Price needs to get above all of this, including this blue line. And I'm going to show you the difference here in another tech, another Fangman Plus T. I'm going to show you NVDA. See the difference in this chart? This is when a stock is healthy. Price is above the daily, the weekly, the monthly, above the hourly. Any pullback in Tesla, you're going to expect a dip to be bought. If it's here, you're going to expect the dip to be bought. If it blasts down in the weekly, you're going to expect the dip to be bought. I'm going to expect dip buy, dip buy, dip buy. Tesla, sell the rip, sell the rip, sell the rip. You can see it in Apple too, a healthy tech stock. Apple, right now, if you're looking at Tesla versus these other stocks, see if I can give you a one-day chart so you can see this. Another healthy one. Price is above the weekly. It's above the monthly, the weekly, the hourly, the daily. It's above all of these. You're going to expect dips to be bought. Let me see if I can clear all this out so you can see it. Just so you can see Apple here. Very healthy. Apple doesn't care about pullbacks. Apple doesn't care if it trades down to $112.32. Doesn't care. Dips are going to be bought. Dips are going to be bought. Dips are going to be bought. You can actually see it. If there's even a capitulation move in Apple, dips are going to be bought. It's very healthy. Apple, how healthy. NVIDIA, healthy. No bull cares about a dip. It's just another opportunity to buy a dip. Tesla, on the other hand, so far until it proves itself otherwise, it's looking pretty fucking unhealthy, right? It's looking like it's looking like it's pretty rough right now. Right? It's looking pretty rough. You need, like, smart bulls buy the retest. Smart bulls are going to wait for price on Tesla to come up, retest the weekly, and have all these triggers underneath it trying to propel it forward. So until we get there, there's no real true like bull trade for Tesla. So far, Tesla is looking like it's rough. It's got some damage done to it. Like it's looking like it wants to be repriced so far. So Tesla, tough call on Tesla right now. Let's look at something else right now. Let's look at the VIX. So you're like, yeah, I want to be long on Tesla on a weekly. And let's look at the VIX. VIX is starting to come into a buy zone, right? Let's look at the VIX right here. It's like, overall, am I bullish, am I bearish on the market? You know you're going to have natural dip buyers on the VIX here, natural dip buyers on the VIX here, natural dip buyers on the VIX here, and you know the bears are going to want to buy this dip down here. It's natural for them. can the VIX roll over and Tesla go higher? Sure. But you're going to be looking for at least like VIX to break below 20 bucks, right? And successfully retest it before you'd even take a long on Tesla. You'd be looking for, VIX to trade lower than 20 bucks and then successfully reject and go lower to be taking a long on Tesla. So can you take a long in Tesla here? Some things you may be intraday or something, but on a weekly basis, it's not telling you that. And here we are. We're testing it right now. 187 bucks on Tesla right now. Testing its daily. You can see it right now happening. Notice how we're pin striking it almost to the pin right here, right? Watch it, pin striking right here on Tesla. And make sure I got the exact price right. $187.23 is what I've got. $187.23. Almost wonder if a hedge fund is watching right now, don't you? Maybe watching us exactly right now. 187.23 here. And what's crazy is if you get a break of this in a hold or a confirmation, it's just like straight down from there. There's like blue sky, like right here. If you wanted to buy a dip, this was the place to buy a dip on Tesla. And if they break below this, like you buy this dip here and you put a stop underneath. Put a stop right here. You buy this dip on Tesla. You might get one quick break underneath. You might get one more blast through. Oftentimes on these triggers, you'll see one last blast through. You'll see sell side trying to get underneath and stay underneath to get much, much lower lows in the market. Right? This is what a sell side wants. A hedge fund right now, where we are currently right at this moment. I mean, I'd be taking profit here if I was a bear. But a hedge fund, a sell side, wants to get underneath. That's what they want to do. They want to get underneath, hold underneath, and take support and turn it into resistance. That's what a bear wants. That's what a sell side hedge fund wants. There's a 1 minute chart right here. Looking at a 5 minute chart. You can see where sellers are easily, right? They're right here. They're right up here at 188. Sellers are right here at 188. And if you wanted to take a long on Tesla, you're going to be looking for this first. You're going to look for this flattening of the red line, right? You're going to be looking for, believe it or not, flattening of these lines, not these vertical. See how vertical this is? This is negative velocity to the downside right here. You want to see the white line flatten out. Even if price is lower, flatten out. You want to see this line come up. And then price, if you saw this and price was lower, you'd be expecting that squeeze higher here, the flattening of this. And then you'd want to see price actually make its way higher and then successfully retest. And this is where you enter. You like set the trade up and you sit there and you wait for this successful retest. You slam the buy button, and we're going north right here on Tesla. Now, right here, just looking at this chart right here, some pretty mean velocity down here, right? Well, look at this line. Look at the verticalness of this line. Look at how violent this line is coming down here. So do I think it's done going down? Probably not. Not with how vertical this line is. Even if this takes some time to trade around here and flatten this line out, flatten this white line out, that would signal an end to the downside move on Tesla. So all the signs are still pointing to bearishness there. I'm not seeing adding like 1, 2, 3, 4 up and that we're going up here on Tesla. And I'm a Tesla bull, by the way. If you're just joining me on Twitch, I'm a Tesla bull. So I'll never lie to you. I'll always tell you the truth. I won't sugarcoat I won't sugarcoat for you, Tesla. I'm a Tesla bull, but I'm not a Tesla Kool-Aid drinker. Just waiting now for this Senate hearing to end.
According to the record, to the CFO of the firm in October.
Key here this afternoon is going to be, you want these people to break for lunch and cocaine snorting and hooker buying or something, these senators and bankers.
So you were first notified in October and November of 2022?
Oftentimes, you will see, oftentimes when these Senate hearings end, you might see a quick capitulation down for a hedge fund to get what they want, and then we'll make that move higher too. So be careful in here, like a sideways movement until the hearing ends. But just be prepared to buy a dip to squeeze higher once this hearing ends this afternoon.
So your testimony says that asset size is not necessarily an indicator of complexity, and I agree, which is why Section 401 of S2155 gives the Fed explicit authority to impose the regulations and enhance supervision.
Kind of sucks on Tesla, right?
Institutions. And you can do that on any bank between 100 and 250 billion in assets, like SVB. The Fed is given this authority to prevent or mitigate risks to the financial stability of the U.S. We both agree that this is existing.
Yeah, no worries, Mike. I got you, brother.
Since the enactment of S2155 in 2018.
No worries, I got you.
Yes, the Fed has broad authority to.
And I love trading Tesla, man. I got you. Like
different approaches to supervision of firms. Under the rules that were put in place in 2019, the firm was bucketed.
How about BTC?
I think that
yeah, I didn't cover that yet, did I?
As I have been doing since arriving at the Federal Reserve in July.
So I was talking to a friend last night, and he was like, "I'm short Bitcoin." And I was like, "Well, you really can't be short Bitcoin yet." He's like, "Well, I've got a very small window of." He's like, "Get squeezed out of my short," and I was like, "Yeah, you can't." I was like, "You can't do that just yet."
Based on the current supervisory record, it looked like the escalations that had occurred were in the format of MRAs and matters requiring attention and matters requiring immediate attention. And the supervisors also put in place what's called.
And you know how Bitcoin bears are. Bitcoin bears are almost as bad. This is my buddy too. I'm breaking his balls right now if he's listening in.
Thank you, Senator Tillis. Thank you, Mr. Chair. Thank you all for being here.
Let's look at Bitcoin really quick.
I want to start maybe with a question that.
Sorry, cash market bulls or futures, Globex traders. We're going to do a little bit of Bitcoinage.
Should have additional prudential requirements. Did I hear that correctly?
So Bitcoin, 30-minute chart.
Large banks, really up the spectrum.
Is there any of the tools, just going back?
You guys want, does it matter with you what I can do any Bitcoin chart you want. You tell me the Bitcoin chart you want, and we can do it. We can do BTC, Tether, US dollar, Tether. You have a preference maybe?
When we create an arbitrary asset limit for
BTC.
the activities of Silicon Valley that got them in trouble.
You guys like USD Tether maybe? Tether?
A lot of questions, and I will get them done on time.
Binance?
You've mentioned a couple of times,
Do Binance?
Vice Chair Barr, that the 2019, I guess.
We're right here. I was already charted this out.
Senate Bill 2155, I'm inferring that. Bucketed Silicon Valley in a certain regulatory regimen. Did that mean that it restricted it from having supervisors make the judgment that the increased prudential?
What I had said to him last night was, you want to see a successful rejection above before you short it, and we got it last night. I think this was last night in the middle of the night. You got the successful rejection above here. So that is leading the thought process to lower lows on Bitcoin. I like this so far. I like this short above here. I told him last night you're going to look for that hourly check, and we got it last night. That was up at 27,200 or so. Got it in the middle of the night. So if you're short Bitcoin here, if you're short Bitcoin right now, last night, matter of fact, if you're watching in the background, if you're the person I was speaking to last night, and you're short from right here, you're good to go short. The play is dead. The cover for this short is 2709,304. The short was last night, I believe. Oh, this was last night. No, it was this morning at 8 o'clock. I said last night, it was this morning. It was at 8 a.m. I got the wrong ticker. But it was at 8 a.m. this morning. I texted him this morning, too. I was like, 8 a.m. it happened. So you got at 8 a.m. the short on Bitcoin. You'd be looking for lower lows on Bitcoin. And that path goes pretty low. You're talking about a target down below of 25, currently 25, probably 800, 25,800, and then you have another target down below here at 2,300. Overall bearish on Bitcoin. Any kind of a successful, and this could take some time too, unless there's a successful dip buy. The one thing I have about Bitcoin that bothers me here is that these buyers are stepping in like nobody's business down here. So if you see any of this kind of like supportive buying, I'm not going to not expect it at this point. I'm bearish on Bitcoin, but not fully bearish on Bitcoin. I'm more like, yeah, this is looking like dip buying action, and his take is that we're going to crash Bitcoin. The crash on Bitcoin is a successful defense of 22,870.09. You can see there was no successful defense back here, and so you would have wanted to have seen price get underneath, and then a rejection. If you saw that rejection, this would be like market crash. Stock market's going to crash. So even my overall bearishness on Bitcoin showing that it's in a supportive environment. There's demand here. You're likely going to find demand here at 25.62.465. You're likely going to find demand down below here and the low at 23.024.44. So Bitcoin overall supportive, but bearish in the short term. My bearishness on it is maybe a move down at 25.67.65, something like that. And you're gonna probably see demand step in and squeeze this higher. So come down here, consolidation sideways, then you get the move higher. Worst case scenario down here to 22.86974. This is what I'd like to buy down here. Preference is to buy that. With a stop underneath if it breaks below and it rejects. There is something scary here, though, and this is what he was talking about. This is daily velocity, and it is starting to peak here. So when you see this daily velocity peaking, I don't want to see this happen because this would lead, don't want to, but this would lead to 22.869 down here. And then I'd expect that dip to be bought here. And then it would roll higher, and you'd actually get higher prices on Bitcoin. So into the beginning of the next month, I'm going to expect Bitcoin to be weak. In the beginning of next month, I'm going to expect the market to be weak on Bitcoin.
Months before the chickens came home to roost, and I wish that we could just focus on that problem.
Weakness in the SPY right now. We're trying to retest a new low. See if the bears can get down here and catch a new low. If not, we'll find out if the market is supportive here.
I don't care how you feel about regulatory tailoring, but use a valid argument to fight against it. Do not use Silicon Valley Bank as an example. Not suggesting that you have, but there are many people that sit up here who have, at the expense of looking at how we can prevent this in the future. And I do have questions for the record that I'll submit. Thank you all.
Thank you, Senator Tillis. Thanks all of the three of you for your testimony, your public service. I look forward to the reviews on these bank failures, and thank you for helping start that process. It's interesting. Many of my Republican colleagues are now so eager for bank regulators to crack down on banks for taking on too many risks. I hope they remember that when it comes time to empower
Hold on here.
regulators and strengthen guardrails, including protecting the independent funding of financial regulators. The events of last month have shown why we need independent regulators, funding, and stability for all of our financial watchdogs. But now, as the Supreme Court considers whether the CFPB's independent funding is constitutional, these independent watchdogs' ability to keep our financial system stable faces an existential threat. U.S. financial regulators, as we know, are independently funded so they can quickly respond when crises happen. On this and every issue, I'll continue to fight to protect American workers from Wall Street arrogance and greed. Thank you for joining us. The meeting's adjourned.
So here, we should see a nice squeeze here.
The Senate Banking Committee hearing on SVB has ended.
Do I think that you cut loose? Do I think you cut loose commercial real estate? Not necessarily. I'm a believer, Winky, that I'm a believer in. I have to be honest with you, man. Like I'm a believer in. There's a couple thoughts here. I'm a believer in. We'll look at some of these commercial real estate ETFs. I'm a believer in two things, Winky. I'm a believer that being too bearish, you might miss a bottom. I'm a believer in So let's start a baseline here. I'm not a believer in DCAing highs of any stock or ETF or ETN. I'm not a believer in that. I'm not a believer in I'll hear people say, I buy the highs, I buy the lows, I buy the middles, I just buy it all. I'm not a believer in that. But on bottoms, I do believe in DCAing. When you have major moves down in an ETF, ETN, or stock, anything, I do like seeing, I agree with that. I agree with that process. If you're like, I'm going to start buying these dips on these stocks, right? I believe in that aspect of doing that. So if your thesis is, hey, it's sold off, which a lot of these have, and I should say it's multifold. It's do I want to start adding, and what's my time frame? I think time frame is another key point here. And how much percentage do I lend to this, and what's my timeline? So let's look at we'll look at a few. Let me look up VNQ. So Winky's asking a good question here. So let's do a couple different. Look at VNQ. Senate hearing is over now. Risk is off the market. The hedge fund should pull hedges, like major hedging off the market right now. So VNQ is a Vanguard real estate ETF. Let's look on a daily chart on it. And let's just look at the accumulation and distribution of it. It's close, right? And there's a few things you need to realize here is you've got the accumulation of it, right? All right, big, nice blast higher, traded all up to $111. Doesn't this look familiar to industrials, right? Doesn't this look familiar to financials, right? And it probably wants that one last capitulation move. Probably wants. They'll create a reason for this last capitulation move. Now, with that said, if you are trying to buy a bottom on commercial real estate, it doesn't mean you can't do a taste for 10 or 15%. Another taste of 15% down here, right? A capitulation move. Maybe there's like one more moment of blood down here. Save another 10% down here. If this is the end, there's nothing saying you can't add some more up here, right? And you don't need to catch the exact bottom. If you're saying to me, yeah, I'm going to buy $111 and 40 cents, I'd be like, you're smoking crack. Like, you're not DCAing up here. You can already see the path of these ETFs, right? The path they take. So do I think that VNQ is done? But sure as shit looks a lot like XLF, right? Or XRE or KRE, where there could be that last capitulation move in VNQ. Let's look to see if we can find anything on a weekly. Oh, look at that. Shocker. And what do we see on a weekly chart? Whole big giant ass gap down below. Look what pops up down here. Big ass giant gap down here. We left a gap behind from the last bull run we had. And it's down here at 68 and 66.76. How much you want to bet we get down there and fill that gap? I'm gonna almost bet that we fill this gap down here. At some point this year, we fill that gap. Right there. But I don't think it's a bad thing to be like, no, let's say we don't. Let's say I'm wrong. At least you had some skin in the game right here. So I think this matters. Your time, and then the last part I would say to you is that if you're looking for immediate, like, yeah, VNQ is going to rip faces, probably not. Probably see it come down here, consolidate, maybe one quick blast down one time, blast up, make some money. I mean, you can make some money and like this will be money for you. But if you're looking for that next run in VNQ, it's probably not for some time. But I like the idea of buying dips down here. I mean, you're front running it. You are front running those dips in VNQ, and this kind of like it's kind of like matches up with it getting clipped next. Does that work for VNQ? If you want to see VNQ, I think you want to do XLRE. But I'm assuming it's pretty close. Yeah, look at that. Same thing. Boom, this is XLRE. And shocker. There's the gap down below. That doesn't mean that XLRE doesn't squeeze up here to $38 and then comes down here.
2026, the minister says.
But I mean, if you're looking for that like long-term 10-year, 20-year cycle, if you're like gonna call me in 10 years and say thanks for telling me to buy $30, sure, call me back in 10 years, man. Right down there. We'll look at XLRE. It's looking pretty fucking bearish. The daily doesn't look bearish here in XLRE. I'm gonna bet that XLRE comes up. This looks pretty bullish here on the short term. So like if XLRE comes up here, maybe you don't cut right now. Maybe you cut at 36 flat. Or this comes down here and it sells, squeezes one more time higher, and then it starts to make its way down. So it could come up here, but my point here is that you're still looking for a low. We'll look at one more thing here too. I'm going to show you some other thing here in the background. Let me see if I can switch this up. Hang tight here for a minute. I got something else here for you. XLRE. This is on a higher time frame for XLRE. What I don't like about this is XLRE. This is a higher time frame. Though price is not showing it.
Order flow in futures, forex, and stock instruments. Get a free trial at takestrike.com.
This is monthly right here. This is monthly right here. I want to show you something that's you can't see in price right now, and this is right here. This is when see this little tick down below right here.
To a 2-week intraday high of
This is showing you that on higher time frames the move is down. This is I believe this is monthly right here. Monthly velocity is leaving, and when you start to see that over time, other time frames. See if I can do this on a daily. I want you to see this right here. This is back in 2020 right here. And I want you to see right there. And you can see it already starting. So this is where the last leg is for XLRE. We haven't even gotten there yet, and you're going to see it, or you're seeing it develop right now. Just be careful of XLRE having that last leg down. Okay. There's XLRE. Maybe bullish briefly, but overall rug pull ahead for XLRE. Does that help at all or no? Yeah, you could get like a trade to $36 or something in XLRE. But the overall trend is down over time. You know, sometime this year. Whenever they pull that rug. And, you know, the other thing saying that too is with XLF crashing, SPY did it. So you could see SPY continue to trade sideways and see XLRE like blast down. You know, you might not see SPY actually capitulate. You could see SPY you could see like the Fed just laugh at these bears and watch SPY just trade sideways, and they just blast down every sector one at a time. I don't know, maybe put I haven't looked at what are you in right now? You're in BX? You're in Blackstone? Dude, I fucking love Blackstone. I do. Blackstone's not quite there yet. Still bearish though. Same setup, bro. Matter of fact, Blackstone's looking more downside risk than the others. Like Blackstone specifically. Is there a when is the Blackstone don't they have like a you can't withdraw money window coming up here soon? That's lifting. Isn't there like a blackout window for removing money from Blackstone coming up? Blackstone looks more dangerous than the ones I'm looking. Alexa, quiet. Blackstone's looking more bearish than the indexes specifically. Alexa. All right, I got to unplug. Alexa's over here going crazy. Hold on a second. I got to unplug her. Blackstone's looking more weaker than as an individual ticker. Do I think you should sell? Like, you know, I can't give you that advice. It's got two small gaps, one at $70 and one at $50. It's got a gap at 70 and a gap at 50. They had a failure to close the gap at $70. Just barely didn't close the entire gap at 70, but it's got another gap down below at $50. If you want to add, oh, thanks for all the subscriptions. I appreciate all the subscriptions out there. If you want to own it at 80 and 50 or 30 and 50, hang tight on it, man. I would suspect that it's going to close the gap at 50. Definitely closing the gap at 70. And maybe that would be the moment. That might be a good ticker, Winky, to watch if we crash. If we break below that $70 and reject 70 to go down to 50, that would be a sign that it'd be a pretty ugly move for the market to go down. Winky gifted a sub tier 1 to Devin. He also gifted a sub tier 1 to Tedley. Don Papo got gifted a sub. Jay Billion got gifted a sub. Just Camo got gifted a sub. Thanks, Winky. Winky's making it rain over on Twitch right now.
That's 1 p.m. Eastern Time. The US sells $43 billion in 5-year notes. Prior bid to cover of 2 to 48 and a prior high yield of 4.109%. Just taking a look at the preview ahead of the auction. Primary dealers' position in the 3 to 6 year sectors was net long $32.3 billion in the week ended March 15th.
We know they're long.
$20.7 billion on average over the past year. CFTC positioning data shows speculators were net short 632K 5-year note futures as of March the 21st, a possible source of covering demand at the auction.
You're a liar, Chase. You're on Twitch watching OnlyFans people late at night. We don't believe you, Chase. We think you're watching Twitch late nights. Late night, like, streamers. I like how Chase is like, I'm only watching this Twitch stuff because it's better than YouTube. Busted. Yeah, that's right. The hot tub streamers, dude. I just found out about hot tub streamers. I just totally found out about them. I'm like, what the fuck is a hot tub streamer? As a matter of fact, I was looking at hot tubs this week. Maybe I should do like a late night hot tub recap videos at nighttime from a hot tub. Hot tub. Too hot. Can't get in. Too hot. Yeah, like so if you're a Tesla bull, you can, I think it's like 125 or something. You can, with a confirmation trade on 125, like confirmation we're going up from here, it's a great buy. But otherwise it's a buy down at like $95, $55 right now. Tesla is like owning it. Like the underlying, it's lower. Currently it's lower. Well, so I got a so I bought a pipe for the stream, and I bought some tobacco for it, and I hadn't smoked out of it yet. I haven't smoked anything out of it, any tobacco out of it, but I was planning on it, and my wife was like, my kids too were like sent to me. They're like, "You weren't planning to actually smoke tobacco in the house, were you?" And I'm like, "Well, kinda." I was like, "Kinda, yeah, I was. I'm not a tobacco smoker, but I was like, kinda." And then my youngest came back to me and had done some investigating, and she was like, we can convert that into a bubble pipe, right? And I'm like, no, I didn't know that. And so I think my plan now is to convert it into a bubble pipe, and I'll take it really seriously, and I guess I'm gonna kind of giving away the the story here. Maybe some of you will forget, but I was gonna pretend I'm lighting up and then just have bubbles come out of the top of the pipe as I read a book to you guys on stream. Yeah, I don't see any downside risk right now in the market. Not today. I don't see someone saying more downside risk. I don't see it. Maybe. If this is end of quarter, I don't see what I'm looking for, or what I'm looking for this week here is into Friday, into end of month, end of quarter. I'm looking for sideways.
That's 1 p.m. Eastern
and
time.
squeezing into that supply that's above at 410. That's what I'm looking for.
109%.
I don't see, maybe it's there. maybe a bear gets 3,600 by Friday. I guess anything is possible. For me, it's end of quarter, end of month, and a bunch of crying institutions that want to score like a 3,600 or a 3,200 by end of quarter. So I got no time for it or them. As a matter of fact, I'm gonna not bet, but at this point, depending upon how the market is structured heading into the 31st, it could open up that downside move. However the options market is priced, it would open the door to go lower after the 31st, after all this shit burns off. But I'm still waiting for major positioning I'm waiting for JPM caller. I want to see what they're saying. I want to see what banks are going to do for the next quarter to make a decision as to where we're going. Maybe a bank gets it. I don't know. Maybe if we crash 300 points by the 31st, to me, I look at that as a positive. If you want to do it the next 3 days, something like that, today, tomorrow, and Friday, and you give me a kick-ass dip to buy down there, sweet. Bring it on. To trade that for 3 days, I don't know. You could buy some way outside the money puts for like a penny or something and just let it burn. I guess if you're out there trying to say that we're going to crash into Friday, I don't know, buy some 5-cent fucking puts for Friday. You guys burn 5 cents. I burn 5 cents all the time, so I guess you could claim that as a win or something. I don't think that you're going to wait for the options market to unclench after the 31st, right? So you can see it. You can see the positioning for the next quarter. My expectation would be after the first. My expectation for this week is we trade sideways, and we're going to squeeze up into supply for people to close positions. You'll also see on those highs hedging come into the market into the 31st. And then after the 1st, you'll see probably a good chance of some downside moves, at least for the first couple weeks. That's what I would expect, at least. Yeah, this whole week, I'll be honest with you. When I was coming into this weekend, by Sunday, I was like, I should just take the week off. I was like, let's just show up maybe for an hour or two a day, and we'll talk stuff like this Senate hearing. We'll talk strategy heading into Friday. But there's been a lot to talk about. There's a lot to talk about with XLF. There's a lot to talk about with real estate. There's a lot to talk about with banking risk, right? We knew coming. We talked about this on Friday. We said when we come into this week, there's gonna be a lot of topics to discuss and less day trading to discuss. More like get all the. You're gonna go on to FinTwit. You're gonna go on to StockTwits or Wall Street Bets, whatever you get on, CNBC, whatever shit you get your information from. I don't know, Bloomberg, whatever it is, wherever you get your shit, and we'll discuss all of these topics heading into Friday, so that we have a clearer picture of what to expect in the next quarter.
Shortly expecting the results of the 5-year notes auction, the when issue does come out at the top of the hour.
But there's people out there, though, that are expecting like a 300-point move down into Friday, so I don't know. I don't know what to say to that. I take that as a gift if that happens. I don't. Maybe. I guess it's anything's possible. Normally, though, we don't normally see that kind of stuff into the quarter end, month end kind of stuff. I'm finding it hard to believe that.
Ron Wyden and Representative Richard Neal, the Biden administration's EV battery minerals trade deal with Japan is unacceptable, and the agreement is of convenience and lacks enforceable environmental and labor protections.
Yeah, I expect this into Friday. Yeah, industrials will be your next one, hands down.
Spot 6.75% before the $43 billion auction.
My bet here is that all this stuff makes sense, right? You see the sideways SPY goes sideways, a capitulation moment or two. Whenever hedges, the only thing that I want to say about this is all you need is some kind of piece of news, and this fucking market's gonna squeeze to all-time highs. I guarantee it. They'll get run right the fuck over. Like this hedging you see right now today, this hedging, you just need something unknown to banks and for market sentiment to change, and they're gonna get run right the fuck over. We'll go up 300-400 points like it's nothing. 600 points. Wouldn't even blink. It will be up there. Just pure, straight face melter straight up. You need like a Japanese, you need like somebody from Japan just start relentlessly buying zero dates and they're going to get run right the fuck over. Like they're a big market participant, sell-side hedge funds, but they're not the only ones. They're between retail traders, outside buyers. You can see foreign countries buying our stock market. Any kind of like their banking goes a different direction and they want to put money in the U.S. stock market. The blink of an eye, you can snap your finger, boom, and that hedge will get run right over. And I mean run over, just like woof, ripping faces north. Yeah, I think that what you're hearing from me is if you want to position yourself for the next quarter, there's a couple things here. Like, let's say you're positioning yourself.
Bid to cover ratio 2 to 48, 2 to 48, and the high yield at 3.665%, 3.665%. The U.S. sells $43 billion in 5-year notes and awards 55.29% of bids at high. Primary dealers accepted bids of 9.41% of amount tendered, and direct takes 79.02%, and indirects 81.89%.
So let's say you're positioning yourself for the next quarter, right? And the JPM comes out and they're like, or some other fucking bank comes out and they're like, we bought a bunch of puts for 2,800.
Sorry, just to repeat there, primary dealers take...
Or we sold calls
direct
to buy puts for 2,800.
Direct 68.46%.
They do that on into the 31st. The fucking dealers are going to take the other side of that trade, right? And we're going to go higher, right? We're going to blast higher. Unless everybody else freaks out. You need like that waterfall cascading put buying. We could just like melt straight up, sideways, and up. That's a characteristic of a healthy-ish market. Like you're hedging the market, and the market just continues higher unless we have a material event that sends the market down to 2,800, right? You'd actually see the market trade sideways and up from there. So if you, as this small-time retail trader, just initially off that trade, you're still probably waiting 2 or 3 weeks to take the short, to take the market short, and then you're waiting for the cascading of put buying and real money selling and stuff like that. There's a lot of mechanics that take place into this weekend that are going to impact your market positioning. If you had the banks come out on Friday and they're like, yeah, we're going to all-time highs. Woo, we're going up to all-time highs. And they're positioned for all-time highs. Fucking expect a bloodbath. You expect the market to go south, just start burning. Hey, thanks, Butthead. We've got VIX squeezing higher now. VIX now squeezing above its 1 and 5 minute trigger. Look for a bloodbath here. I should have mentioned I got VIX open in the background here and I wasn't paying attention to it. You want to see VIX trade to 21.21 here. Here's your S2 down below. Targets down below. Nice little bear cross up here. Beautiful little bear cross. Double bear cross. One right here, another one right here. Here's your previous low right here, and here's your S2 down below.
The US 5-year yield dips after the auction last at 3.671%.
You see someone saying there's a good dip buy on. Well, VIX is trading higher right now. VIX is trading 20.58. We'll see if it can trade up to 21.19 or just below it. Let me look at Tesla in the background. Someone's saying there's a good dip buy on Tesla. Tesla's trading above its 1 minute trigger right now. We'll see if it gets the rejection here. Could see a Tesla bloodbath here too. Let's look at Tesla real quick. This is the one I was talking to you about. So Tesla, you want to be paying attention to it. You want to see if it actually rolls here. See this hourly come over. See this 5 minute come down. So you can buy the dip here, and then we'll see. It's roughly at 186.50. Well, we're looking to see now if price gets above 187.50. Be more confident in that trade here. That move higher. Give me just 1 second here. I got something to take care of here in the background. So we can get a trade going on here. Talking to a buddy in the background. $395. So we can get a little tee off right here. So we can take a trade. Come on now. It's okay. Nope. Hold on. Relax. I'm missing this trade now. I wanted more of a touch above. I missed the trade just now. Hold on, my phone's blowing up here in the background. Careful on Tesla here. PT right here, 394.56. Trying to catch like one last bar up here. I missed this trade to take this down. I wanted to take that one down right there. I fucking missed it. Come on, baby. $114. New low right there. 1 minute left in the 15-minute. Doesn't need to go down right now. We got a new low. That's all it needs. Maybe I'll get one more. Maybe I'll get another opportunity to buy this. Maybe able to buy it up here. If we can get a squeeze up here, I'll try to take that. Again, it's going to leave me behind. Yeah, I think I'm going to get left behind here. Don't let me get left behind here. Squeeze up. $3.85 is like 77 cents at one point, but I don't want to get trapped at 86 cents. They're like 77 cents up here.
$102 counterparties take $2.232 trillion at the Fed reverse repo operation.
Let's see the 5-minute really quick. Yeah.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
We should get down here. I missed the trade right here. Wasn't paying enough attention. Trade was right there. I'm hoping to get in if I can above here somewhere. Otherwise, we're probably just gonna keep grinding down and tag it. So I'll have to wait until the next one to take the next one down to PT2. VIX now trading 2067. 2113 looking for on the VIX. 2110 somewhere. Maybe just 21 flat. Let's call it 21 flat. See if I can snap a line in. Still flat right now. Yeah, I don't want to. If I buy right here, and we like squeeze to here, it'll be worth like 50 cents or something. I'll be upside down, like lose 50% of value. Kind of missed it right here. I thought it was going to squeeze. You can see it back up here. Got that nice squeeze here. Nice squeeze back on the 5 here. I was hoping for that last little squeeze right here. And that bloodbath down there. Don't want to get trapped. As a matter of fact, they're back to 70 cents, 77 cents right now. Kind of garbage trading right here. Need him at like 40 cents, 50 cents. Squeezing higher now. Just fucking squeeze it up, dude. Squeeze it up to fucking 395.40. They're only they haven't lost any value. They're at 74 cents. They're holding value. The squeeze right here only took 3 pennies off. I don't want to buy them unless they're like 40, 50 cents, somewhere up in here. This right here will like blast them down to like 40, 50 cents. You feeling that pain? Or any of you inputs right now feeling that? Not pain, but you should feel pain right here. Not that it's not going to roll over. Just want better positioning. Now, some bulls are going to say this is a bottom here. Bottom, bottom. Sell bottom. Failure to make a new low. No position right now. We're looking at a higher time frame here. Big old bear cross right here. See it? 15-minute chart. Very bearish. I'm going to tee off up here at 395.50. That's where the squeeze is too, 395.50. Do the 1 hour. That's still bearish. 395.50, somewhere up in here.
To address the Democracy Summit at 11:30 a.m. Eastern Time tomorrow.
See if we can get some good price in here. Somewhere in here I want to buy. Price is like, yeah, just buy us right now. Just buy. I'm like, yeah, I don't know. Yeah, nice squeeze on AMC today. a good, nice squeeze on EMC. The GME looks like it's up next, doesn't it? BBY's fighting for it too, isn't it? They're all fighting for the big squeeze higher. I'll have to look at UNG right now too. Nothing in UNG that I can see. Fucking Boyle's trading at $3.58, baby. Boyle, that's the real and look at Boyle, dude. Woo. $3.58.
White House's spokesperson Kirby says the US would be willing to share data if Russia came into compliance.
This number's coming down a little bit in the background here. Let me check on SPY, that same place to target a buy. Oh, so much drama. You know how this goes, right? It's like all day long. Like the next 2 hours, I gotta buy a decent put here, and I gotta wait another 2 hours for it to print. Makes me want to buy a call spread for Friday here too. What are call spreads for Friday here? You know, look at some call spreads. $395. 31st. 400 and 389. Hey, give me just a minute. I've got a delivery coming in at my front door. I got to go pick it up. Hopefully we squeeze up here while I take a break and come right back.
So the White House says the US is still willing to sit down with North Korea to find a way towards denuclearization. The White House says Biden still supports the price cap on Russian oil.
Damn, I'm too late. couldn't even get a buy-in on that rip lower here. That sucks. I was hoping for a squeeze. I didn't buy this one. I didn't buy that one. They gave me two chances, and I'm like, nah, I want to buy up here. I'm too cheap. And now I'm looking for a way to buy a call spread into Friday over here. One week. Trade the SPY. 31st. Call spread. If I can get 393. What's the VIX doing right now? VIX almost at resistance here at $20 or 2101. I think I talked about 2101 above. And then we also have another place above. Two other areas of interest on VIX is 2118 and then 2187 on VIX. So just keep both of those numbers on your targets above. I'll bring up the VIX real quick for you to see. So right here in the VIX, so you can see it, almost a perfect tag. And you've got another place of interest right here, 2118, 2119 in the VIX. And then above that, you've got 2187. So 2118, 2187 on the VIX. Still watching the VIX in the background. Coming up into its hourly trigger right now at 2118, 2119. So where are we at now? 394, 393, 393, 395, 394. Try 390. Save strike. 391. Only make $28 on a. Looking at a call spread to buy down here for Friday. On like this move lower, grab like a 391, 390 somewhere down here, but it doesn't really pay that well. If we can get down here to 391, I might look at it again. S3 is down here. 391.70. I don't think we get down here, but if we do, this is like another price target down below. But if we can get down here, I was like 391, 390, 391s are, they only pay 393, 392, pay 50%. They could pay 100% if we get down here to 393. Call spread for Friday expiry. If we can trade down here, I missed the puts up here by just a few minutes. See how quickly it happened, right? Or it was here, I think. Here I wanted to grab a squeeze above for this trip down. Missed it. Offered it up to me again here, and I'm like, nah, I want to buy it up here. Missed the trade. So now I'm looking at call spreads down here. If we can get down to 393. 393, 392s for Friday are 64 for 36 currently. But if it could be like 50 for 40 maybe down here, 50 for $40 down here, I might take them. We'll see if this continues to the downside. If there's any squeezing or something, I'll jump back in puts, but I feel like I'm late to the game on this one. Is JPM caller considered a magnet or a target? It's kind of weird. It acts as both. And not only that, the 360, so like the 36, I think it's 3,600, that acts as a magnet to lower prices. But there's a bunch of supply above at 410. So just that supply sitting there, I'm like, yeah, we're probably going to fucking squeeze up there at some point. I don't think that supply would be sitting there. Like when you see supply that high, it hasn't been tagged yet. So that's why I'm like, yeah, we could easily trade 410, no problem. It's like 3,600 is a magnet to the downside, but it's not like it's like a magnet that's far away from metal. It's not close enough to really do a big, like, huge face ripper down there. I think the implied move for today, too, is 395. What am I looking? Let me look at SPX real quick. Let me take a look at SPX. I haven't checked this at all. Yeah, so right in here on SPX is the implied move for today. So we're getting a little long in the tooth. I want to see if we can get down here, though. If we can tag this PT2 at least. I think I got this right. Let me look, make sure. Yeah, the implied move. For today's expiry, and the low is 392.82. 392.82, somewhere down in here. But that doesn't account for implied volatility, like zero dates in the market either. So this is kind of like, I'll just start heading down here. We come up here and slam down here. It's kind of like not a bad idea to be by, like the put spreads that we talked about the other day. As we start to print these yesterday and today, we're looking to like catch the other side of this trade down here. And on the 31st, we've got 399.82 as an upside target for Friday. But that's an SPX price, not a SPY price. Now 144. We got a new low here into the 15 minutes, so there's no requirement that we get down here. Could trade back up to 395 or even 395.15, 394.54. I mean, excuse me, 394.59 or 395.15. But still another half hour bearishness. So we're gonna expect this PT2 to get tagged either now or by the half an hour or the hour or the half an hour at 2 o'clock. Let's take a look at Tesla. Tesla trying to pull its pants up right now. So Tesla right now, right where Tesla is. Tesla's right on with that rejection point. We're in a 3-trigger cluster on Tesla right here. So we're either going to see a pretty giant squeeze in Tesla or a failure in rejection to lows. So pay attention to Tesla right here. We've got a 3-trigger. We got a daily candle. We have a daily trigger, a 5-minute trigger, and a 1-minute trigger on Tesla. If price can get above 187.24, you would expect a face ripper to 190.64. But it's got a lot of work to do. And to be honest, to the downside is, no, I guess it's looking pretty bullish here. Just looking a little bit bullish here. 5 minutes improving. Believe it or not, the hourly is improving on it. It's improving. And the daily is improving on Tesla as well. Be careful if you're a bear here. If you're a Tesla bear, be careful. Could be a fat rip on Tesla coming up. Yeah, Tesla's about to squeeze. Squeeze pretty hard, too. We'll see if it squeezes or if it rolls here. It's kind of a deciding. So if you're a Tesla bull or bear, open up yourself a Tesla 1-minute chart, and I want you to look at that price, 187.29, right in there. Price gets above that, it's going to get pretty squeezy on Tesla. But this is also the place for Tesla to roll over and go to some new lows. This is a place for Tesla to tell you, no, the way is down. Could get ugly for Tesla here, too, is my point. $7.19. Well, Tesla's improving here. Tesla's trying to squeeze right now. It's trading 187.19, 187.20. Daily is improving. Hourly is improving. 5 minutes improving. 1 minute's kind of dog shit right now in Tesla, but we'll see if it can start squeezing there. So 1 minute's just kind of crap. But the 5 minute, the hourly, and the daily is looking much better on Tesla. It's improving. VIX now trading its hourly trigger here at 21.20. A key moment here for the VIX. VIX wants to trade. Like if the VIX can get up to 21.83 or so, you could see that last capitulation move for the SPY at least. Try to slam down and just nail that down there, or even just this area right here. We'll see if the VIX can squeeze higher here and just get that capitulation move lower for the SPY at least.
White House's Kirby says there's no plan for U.S. officials to meet Taiwan Tsai in the U.S.
This stream is sponsored by To The Tick. Get free daily pivot points.
Fucking bar through SVB under the bus today, huh? SVB was notified they needed to fix problems since November 2021. They started fucking whacking these things back in December, didn't they? Of 2020. Now trading 394.03 on the SPY. Can we get the break down below here and get some tags? If you are still in puts here, just remember to take some profit as you nail down this. If we come down here and nail these lower lows, take some money. $394.06 right now. VIX now above its hourly. We should get a push lower here. There might be a little moments of a squeeze here, but at least SPY should get down there. Might take some time, some consolidation time to get down there. We got the VIX is now trading above its hourly trigger. It's at 21.23. With a price, if it can hold, if VIX can hold 21.23, you'd have a target above of 21.87. Let me go back and look at Tesla again. Yeah, Tesla's kind of just in this holding pattern here. Tesla's like, let SPY go down so I can go up. Trading 394 flat right now. See if there's anything been gleaned from the day before. They got a VIX at now 21.24. Should be able to hold. Just waiting for the 1 and 5 to catch up on it. Probably not done here. Even if there's a squeeze, they're probably not done. Still looking for those lower lows down below. Blackstone selling down to 82.52. KRE on a bottom, localized bottom. You know, it's kind of crazy, Winky. I meant to say something to you. Remember we were talking about Dollar General? There was another one that's the most shorted stock out there. It's not Dollar General, but it's one of them. I forgot to tell you about it. What's one of the other dollar store stocks? One of the other dollar store stocks is being shorted to hell right now. I meant to tell you about that. Big Lots, brother. Is Big Lots still considered a recession ticker or no? I don't know if that would be in the same family as Dollar General. Nice capitulation move right here. 393.86, 393.70, 8, 393.83. PT2 almost a tag right now. See if we can get down there and just hit it. Yeah, Big Lots, man. I was noticing that has very high short interest on it. It's got 56.68%. IWM rolling over right now to check its previous low from the open. IWM coming back down to trade 172.69 right now. Tesla rolling over slightly, but not too bad. The one thing you don't want to see here is this rejection on Tesla. If this rejects right here in Tesla, it could be pretty ugly here. And I would have a vastly more negative outlook on Tesla going down the road here. Well, last time it broke below Tesla, it didn't confirm a rejection. Right now, Tesla's trying to confirm a rejection to lower lows. Trading 393.80 right now. Can we call this done or a tag maybe? I don't know if this is exact right now. I didn't when I throw these lines up in the morning, I'm just like, yeah, a few pennies here, a few pennies there. Nice little tag though, close enough. Hand grenades and horseshoes. You might get the one little bit of extra money right here, break through it at least. If you get the breakthrough, it's going to show you that we're going to head lower down here at some point in a little bit. But Tesla's not taking too much damage. I mean, I'm looking at other tickers that are taking a whacking right now. I mean, look at NVDA. NVDA hasn't done shit. NVIDIA's like, yeah, get fucked. We ain't going down. I can't imagine if you're an NVIDIA bear right now. You're probably in full rage right here. NVIDIA hasn't moved. It's like, get fucked. Eat a bag of dicks. FRC coming in to close the gap down below at 12.56, 12.57. Still a gap left from FRC at 12.36. Apple took a hit here, but not NVIDIA. Apple's trading down to 155.98. New low on Apple right now. TLT squeezing faces off. Gunderlock's happy right now. GS still has a bunch of gap to fill down below. It hasn't filled its gap at 314.22. Bank of America is in free fall right now. XLU selling off in the background. Meta's coming back down to test its lows. GME had a pretty good squeeze, but not a big one. Schwab coming back down to clean up some of its mess. XLK testing lows, XLY testing lows. XLP was pumping the last 3 days. It's looking like it's almost at a buy again. USO squeezing higher again today, doing well for its third day. INTC holding up nicely. Amazon coming back. I think it just broke a new low from 3 days ago right here. That's good to see. Coming down to retest its low back here at 95.71. BBY not doing anything right now. UNG not doing anything right now. Dude, CPRT, man. Cranking, baby. Talked about CPRT a few weeks ago. You guys remember me posting about CPRT? CPRT just keeps pumping. Oak Street just keeps pumping. Osh, remember Osh? Just keeps cranking. That's back. Remember we talked about CVS and Osh and CPRT? Just face ripping, never stopping. Just keeps going higher and higher and higher. Ugh. VIX just waiting for its 1 minute to catch up right now. And it's 5 minutes to catch up. You guys remember those tickers? Wiki, Vert has recovered nicely, man. A Vert with a double bottom. So VIRT, ticker Vert, tagged 1624. A new low a few days ago on 324 at 1688. Coming back in right now to test previous highs and has some gaps to fill above. It's just face melting straight up today. It's got some gaps to close above at 1846 and 1860. Though the sellers are below there. The sellers on Vert are hiding out at 1824. Nice double bottom on Vert. HYG on a cliff right now. No trades for me at this point. It's a 5-minute chart. We'll see if we can get up to 394.87. This is the last place they teed off from. 394.87 right up here on deck for a trade higher. 394.87. On a 1-minute chart, it's right here, 394.86. Maybe I'll get my second chance here. Tesla beginning to squeeze, now trading 187.57. We'll see if Tesla can go to 190. I'll give you an exact target on Tesla here in just a moment. Start taking profit near 190 flat. The trade is dead if we trade below 187.27 on Tesla. And it'll get bumpy up there too. You know that at 188.58 they're gonna try to sell it on you. They're gonna try to sell it on you at 189. An extreme upside target on Tesla would be 190.48. Trying to watch this VIX, see if it rolls over here, if I can grab some calls. $2.10, 5 more minutes. Bears aren't putting it together here. It's going to squeeze. 1 o'clock, 2:15. Bears not putting it together here. They're losing the next 5 minutes. No new low. We're going to squeeze higher to 394.79. Wrap it up, Bears. Bears like, we're crashing the market. I'm like, no, we're not. We ain't crashing shit. We're dip buying. Four minutes, Bears. You got 4 minutes. Better get one big red bar to the depths of hell here. Bears are like, I need to tag below 393, bro. 393.69 is not good enough. I ain't got no time here, about to get squeezed out. I'm like, yes, you are. Yes, you're about to get squeezed the fuck out right here. 4 minutes left for Bears. Four minutes. Bears need a new low. They need to get below 393.69 to validate this move lower to 392.80. Three minutes left for Bears. Daily, weekly, hourly velocity heading to the downside on VIX right now. See if this can roll VIX over and down. Try to bloodbath the VIX here. Two minutes left for the Bears. Come on, Tesla. Start squeezing, Tesla. Read some news off to you. Biden administration trade agreement with Japan for EV battery minerals is unacceptable. Democratic Senator Wyden and Representative Neal. Right? So you're already hearing about this stuff, right? Manufacturing. 102 counterparties take 2.23 million or trillion at Fed Reserve repo. Biden to address Democracy Summit at 11:30 a.m. Eastern Standard Time, March 29th. U.S. Defense Department spokesman Kirby. I don't know why this really matters. I guess it matters for the U.S. dollar. The White House, the U.S. is still willing to talk with North Korea and find a way toward denuclearization. Got a nice squeeze coming up right now. Price target above 394.75. It's kind of funny. North Korea is like a weird thing. All these North Koreans, man. They're here goes a nice squeeze here. 394.18. Nice trade developing here to the upside right here. Like you go to Korea, like South Korea, and you can see. I'm making some money here finally. So you can see the nutrition difference. Like when you go to the border, you can see like the nutrition deficit that even South Koreans had. And then South Koreans had nutrition deficit. They were under a dictatorship, I believe, until 97 or something. So it's not like they were the best. Like they had the best quality, nutrition, but it's nothing in comparison to North Korea. So like when you look at North Koreans, if you go to the border and you see a border guard, you're talking about like huge stunted growth. People think they know what that looks like, but unless you've been there, do you actually see? Like when you see it in person, it's not like seeing it in a picture or in a video or anything. If you're there, you're like, holy shit. And then they put their largest people on board on these border stations. They have like fake cities and shit. And it's kind of wild because you're like, you think you know what it looks like until you actually see it. And then you're like, wow, this is generations of malnourishment and how the human body can just change to that malnourishment. And one of the wildest parts of Korea, the Koreas, is these people want reunification, which you'd expect, right? It would be like the U.S. being split in half for a period of time. Let's say we have a civil war, let's say, right? And they split the U.S. in half for a couple generations. And let's say pretend they had split the U.S. in half. Let's say hostilities end, even though we're still at war, like general hostilities end. There comes a point where you're like, 20, 30, 40, 50 years down the road where you're like, yeah, that's enough. 70 years down the road where you're like, yeah, let's just reunify at any cost. And so I always find it kind of humorous. I kind of find it humorous when you hear things like, and of course the U.S. wants no reunification because it gives us a foothold, right, in Southeast Asia. We have a foothold there. Military has a foothold there. We have influence over the government. They do a great job. South Korea does a great job manufacturing as well. So they're a great trade partner. And they're a military partner for us as well. They have a warrior-like history. They fight good wars and stuff. The ruthless fighters. If you've ever met a ROK soldier, they're ROK soldiers, Republic of Korea soldiers. They're badasses. Complete badasses. I'd be scared of him, right? But even so, like if this was in the United States, at some point you're like, yeah, you know what? Let's just reunify at any cost. And then on top of that too, you've got North Korea like saber rattles constantly. They're just like constantly saber rattling. Like we're gonna do this and we're gonna do that, and they'll light off a 105 or a 155 or something and threaten war and all this kind of stuff. But the real truth is that if North Korea just ever opened their border, like if North Korea ever just opened the border to South Korea, there would be nothing that the U.S. could do. And they would more than likely reunify at any and all cost. It'd be something where, without a shot being fired, you would likely see a reunification between North and South Korea, and they would work out their politics, whether in our favor or not, the U.S.'s favor or not. You'd likely see, without a bullet being fired, that war would be over, and that's how wild it is in Korea. That you could see North Korea actually win a war without fire. That would be the way. That's the everyone harps on like North Korea, their nukes, and North Korea this and that. Truth is, if North Korea ever wanted to win that war, they just open their border, and the war would be over. And you'd likely see backlash to the United States. The U.S. would lose footing in that reunification. Now trading 394.43. So like all the, what you're fed as a civilian, what you're fed as, as an American, the real truth of it is that the most danger to U.S. The most danger to the U.S. right now would be, believe it or not, just reunification. Trading 394.46 right now. 395C is doing pretty well here.
So just seeing US listed shares of the Alibaba Group extend gains on the spin-off plans, last up 14.8%.
Yeah, Baba cranking today.
This stream is
Trading
sponsored by
395, 394.48.
TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
I'm wondering if I should just hold these into the close. Now 2:21, 9 minutes left for bulls. What I hate is that directionally these things are going to get burned either way, so I might take some money here. Yeah, China loves Korea split too. China loves it. China and the US like it. Abso-fucking-lutely. But China wouldn't want to see that either, would they? China would never want to see those that border come down. Oh yeah, South Koreans want to reunify with the North. Absolutely. Fuck yeah. No one's ever told you that? It's weird. Like what we're fed as Americans is kind of weird. Like that's like I try to relate this like let's say the U.S. Let's say we had the Civil War and 2 or 3 generations passed and they didn't allow us to reunify because I don't know. Let's say Mexico wanted a buffer state between Canada and Mexico. And you'd just be like, yeah, we can get over this. We'll work it out. Yeah, China definitely doesn't want reunification either. Well, I don't know that China doesn't. I think if there was reunification, China would do as much as they could to reunify with North Korea being the center of power. And you would expect that too, that reunification with North Korea. Well, that's the same thing with that happened with the Berlin Wall falling, right? There was some economic damage done to that reopening too. It's one of the few societies left. I don't know. I have mixed feelings on that Winter Soldier. Like I have mixed feelings on it. I'm trying to throw it over liquidity break right now. Like I'm on the I'm like an old school Democrat, but I realize the need for there needs to be world police. I know you don't want to hear that. Like freedom isn't free. Even if how horrible we are sometimes at freedom, the US is. I've been around the world. Like you see some places and you're like, oh, it's all nice and everything is great, but the truth is, as an American, a lot of us have no idea what depravity is. Like if you see real depravity in the world, you go to like a country like Korea. South Korea is a good example. It's considered a first world country, an emerging first world country. But you leave a city there and you try living like that as an American, you'd be shocked. Yeah, we go like you go on vacation places and you're like, this is a nice place, but then you go like 2 blocks down the road and you're like, oh shit. And that's one part about that's good. In my view, that's good, and that's what personally why I joined the military. It was I was turning 17 or 18. I didn't want to join the military, and I joined because I felt this greater need, like this this idealist. And there's a lot of people in our government like that too, right? That are longtime servers. You'll see people that can claim multi-generations. Some people, like some of the conspiracy theorists, will be like, "Oh yeah, that's the fifth estate." They're not politically ideological. They're old school Americans that try to tie together an altruistic idea of freedom. Now, we fail at that all the time, but you know, it's like we want to be a Norway or we want to be one of these we want to try to be like a Scandinavian country. We just fail at it. Yeah, Winter Soldier. I can't see what you're doing there. Well, some of the comments. Hell yeah, dude. That's. Oh, you know what? I thought this was. I don't think I've ever seen this one. Yeah, no, I joined because you know, like your family serves and stuff like that. They feel like they owe like you know, like you know, like you know, it kind of like made me scratch my head. I was looking at, or I remember when Elon Musk was saying something about there shouldn't be identity politics in the military, and I was like, yeah, I agree with that. But do you realize that our military runs on? Our military is basically functions on minority service. It's one of the few places our society has offered minorities to have a way out, protections for them, and then a serious career. This is going back generation after generation after generation, where they might come from places where they're abused by society. Military has a very long, strong history of rear echelon cadre, being able to give a career, education, a step up, leg up in society, cultural leg up. And I was like scratching my head. I'm like, I don't think he realizes that the military is one of the most forward-thinking institutions, and like an open door. People otherwise don't have any other way out of a bad situation in life. I know that some of the veterans here know this, but civilians probably don't know that. Yeah, Pauly Shore is the shit, man. He's funny. There's a cadre of, you know, there's an entire cadre of African Americans in the military, going back generation after generation after generation. They keep our military running. If you didn't know that, Elon Musk, literally, logistically, keep our military functioning. I'm not talking tip of the spear. Good old boys from down south. I know who those guys are too. No, the tip of the spear ain't doing shit without logistics. Tip of the spear is be polishing their rods without the remps. That was the other thing that kind of freaked me out yesterday. I was really saddened.
NYMEX natural gas April futures settled at $2.03.
And that's shooting yesterday. That's shooting yesterday in Tennessee. And then the one thing that bothered me about that most was I saw a picture. Maybe some of you saw it. There was a picture. It really deeply troubled me. I saw the child that was in the bus. There's a photo that came out of a child in a Nashville bus that was being driven away. And
NYMEX WTI crude May futures settled at $73.20 a barrel. That's up 39 cents or 0.54%. And the NYMEX diesel April futures settled at $2.76 a gallon.
you know, that look inside of it, that look inside of a face here. Just heads up, be careful here. Let me look at Vix. That child's face, right? I've seen that before. You've seen that. I've seen that in adults and children. We got Vix here trying to make a run back at the hourly trigger here. I've seen that in the military. And I'll tell you what. Yesterday, I'll be honest here. So yesterday when they first reported, that shooting, I went on to Reddit to
71 cents a gallon.
To LGBTQ subreddits to see what their take on this was. And they were quiet. Nothing. No posts, no commenting, no nothing. And then I eventually saw, and this is after being on Twitter, and of course everyone's harping on that the shooter was trans. And then I went on Reddit later, and someone had made a post comparing. Well, there's two issues here. One is they're doing identity politics on a shooter, and saying this person was trans and they're a mass shooter. But then when you look at the actual data, mass shootings are not committed by people that identify as trans. That's usually committed by white guys like me. In a very high percentage of white guys like me that do that stuff. And we're talking like 0.001% or something crazy like that, you know. But the grossest part of it is we've got a school shooter. We got somebody that murdered children, regardless of their identity politics or even if they're angry because they were trans. And I made a post a day or two before on Twitter saying something about conspiracy theorists, and from the left and the right. We used to have programs, mental health programs in this country to institutionalize.
So natural gas falls 2.8% to end a 30-month low of $2.03 on a weak springtime demand and storage oversupply.
People with we institute now, whether those programs weren't good, they were actually really bad, right? They weren't implemented well. But we cut a lot of these people loose on the street with no safety net to get them off the street. And the real tragedy here is we're saying, look, it's these trans people and pointing fingers. And the truth is, I'm watching this kid in this picture yesterday, and it's worse. It's really horrible. The focus should be on these families that lost their children, these kids it'll be if you're a soldier out there watching this program right now, those kids will never forget that experience for the rest of their lives. It's going to come back a week later, right? 3 days later. It's going to be like a nightmare. If any of you have ever been raped, if any of you have been I shouldn't say raped, but any of you have ever been in a situation, the way that this PTSD happens is when you're put in a situation. If any of you have PTSD out there, it's normally something that's out of your control. Your free will is taken away from you, and something really bad happens. And you relive these things like a nightmare, like full Technicolor nightmare. And the time between reliving those events spreads out over time, but you never quite ever get rid of those experiences. They'll come back to haunt you in your sleep. They'll haunt you in your decisions that you make for the rest of your life. And so when you're seeing these tragedies happen, rather than focusing on the fact that we have this going on in our country with people with major mental health issues, no one normal is going to commit these crimes. Give me a squeeze here, baby. Get on up there. And we're trying to slap labels, but the left is the same way. The left's like it's the white guy. It's the MAGA guy that's committing this, trying to kill trans people. Then you got MAGA people trying to point at trans people for killing MAGA people. What do you got like both sides, and it's all identity on both sides, left and right, left and right, left and right. The real tragedy, man, that's left in the wake of this, all of it, are these innocent people, and it's gross. It's gross when you're like, hey, it's a MAGA person. It's gross when it's like you're a trans or something. And we're like assigning blame when in reality we've got a mental health problem in this country that's fucking wild. Absolutely fucking wild. Unaddressed. It's not my problem. It's their dude. I've had two people in my life that I've known with major mental health issues. They weren't my family or anything, but I've known two people. And as far as I know, they're just allowed to run around and live their lives. There's no intervention. And I bet you probably know people in your life that have mental health issues, like major ones. They're allowed to pretty much do whatever they want. They do anything they want. They can walk down and do anything they want anytime. And I've seen family members of these people say they're okay. They seek help or they're on medication or something, but you really don't know if they are or not. They still have access to whatever they want to have access to in life. And sometimes they leave a path of destruction. Sometimes they're oftentimes given excuses too. Well, they have a mental health issue. It's not my fault, right? There's no my brother's keeper in the United States. There's no governmental intervention. And that's bothersome to me at least. Or they don't want the help, but yet they still have access. And we're forced to accept these people as normal functioning human or society members. I saw pictures of that person yesterday dressed up, and I got friends that don't have mental health issues. They dress up in that shit. I think she or he had camouflage pants on, had labels on a gun, like that kind of shit. That society that we have right now. I'm sure she showed it to her friends, and there's guys like that too. Like there's the right. There's people like that. Spend $2-3 grand on a rifle, and you're living that fake ass I'm a soldier bullshit with some fake ass camos. telling me you're just protecting your freedom and your rights. I'm like, man, come on. Like some of this is just fucking crazy. I know hunters out there that aren't like that. I know sportsmen that aren't like that. But there's a whole, like, I remember when I was a kid, like, when I was a young kid, there was, when I was a kid, if your family knew that you had mental health issues, you weren't allowed around a gun. There was no discussion on that. Now everybody's like focused on everybody has a right to a gun. And there was a lot of respect for usage of firearms and weapons. It was never glorified when I was a kid. You'd have your stuff to go hunting with, but you weren't walking around acting like you're a fucking soldier. And we glorify that aspect of gun ownership. To me is new. I've never seen it not like that. It was always like it wasn't like there wasn't a glamorous part to this. And like the glamorization of guns bothers me deeply too. But it goes into the wrong hands. Maybe not your hands, but other people's hands. And it's accepted, which is kind of crazy. I got my pink M16. I'm like, I don't know, man. $394, not M16. Shouldn't call it an M16. $394.41 right now.
$78.65 a barrel. That's up 53 cents or 0.68%.
This stream is sponsored by To The Tick.
Yeah, I don't know.
Points, Fibonacci, and market.
I guess it doesn't bother any of us until it affects us, right?
ToTheTick.com.
You saw the Udeville shooting, right? And you saw police outside by the truckload, right? None of those guys went in there. Some of those guys went in and got their own kids out. You know, they did a good job. Nashville PD did a good job yesterday, but you know, it's like not in my yard, not in my backyard, not in my house, hasn't affected my family yet. But once it does, then the rage kicks in, right? Finally. Yeah, it's like a fetish. I'm not down with the gun fetish. Never have been. Don't like it. I'm not anti you owning a gun or anything either. I'm not anti-gun, but I am anti like the fetish shit associated with it. I think that's a good way to describe it. Yeah, I think we can all identify. I think most people. I think if you're like a normal person, you can identify it. I would bet any of you. I bet no matter what your politics are out there, I bet you know somebody that you're like that motherfucker shouldn't have a gun. I bet you know somebody. I bet you know someone in life, and I bet you they're probably not every time, but they fetishize it. Like I bet you know somebody that's like, yeah, that person shouldn't own a gun. There's nothing I can do about it. I bet you know one or have known one person. Now trading 394.50, trying to squeeze up and tag this 394.58. I bet you know somebody. I bet you know somebody out there that you're like, if you don't know that person, I bet you know somebody you're like, that person should never get their hands on a gun. And there's no way to stop them if they ever wanted one to get one. I bet you know people out there that should be allowed to have a gun that can't have a gun for whatever shit they pulled. I'm not anti them getting a gun. But we know the difference. I think most rational people are like, yeah, that guy, or like that guy got, I don't know, maybe I don't know, you got a DWI or something and paid his penance, or got a felony that was white collar. Yeah, that guy could probably have a gun. But I bet you know somebody out there that's like, that motherfucker's never had a felony in their life, but they don't deserve, they shouldn't have a gun on them at all. No, it used to not protect them. That's the thing. That's where you're mistaken. It wasn't like that. There used to be a time in this country, up until the 1970s, they would lock your ass up. Your sister, your brother, your neighbor would call, and you would get locked up with no jail. That's the truth. They used to call up the nut house. That's the actual truth. The good old days. Remember those, the good old days? No? We like to forget some of the good old days. We like to remember just the good parts that we remember, but not all of them. We'd lock your ass up. No court. You guys remember the Nut House? One fucking phone call, gone. You pulled some whack shit, you're out of there. Now trading 394, 50, 60, 70. That is the truth. It'd be kind of good, like it'd be kind of good, just like in the military, they don't let you carry around loaded weapons. Most military bases, you're not allowed to just walk around with a gun. Even the military doesn't trust soldiers to do that shit. You know, just some kind of a background check would be nice. Check with a doctor would be nice. Oh, yeah, baby. Dude, they're not paying shit on my calls right now. All right, that's the last pack right there. I'm done. I'm out. That's it for me. I'm flat right now. Done. It's weird. Like, Maybe you want to own a gun or something like that. I just think just a quick, like, doctor's note. That would be nice. Like a doctor's note. We can't do that with HIPAA right now, right? Just a doctor's note. Do you know anything about this person having major mental health issues? You know? Yeah, I don't want to bring back the good old days. It's just like to see, like, you know, a father or a mother could say, hey, look, my child has, bipolar disorder. They're functional, but they shouldn't own a gun. Here's their doctor. Don't allow them to own a gun. Yeah, I don't know, man. You hear that? I hear that shit all the time about good guys with guns stop shootings. I'll tell you what, man. You own a gun. You have a gun on you, and the cops come. You're gonna get blasted. I think people have these pipe dreams of what owning or firing a gun at people is, or what it's gonna be like firing a gun or a handgun. I'd say 70% of gun owners couldn't fucking hit a human 10 feet away. They could probably rip a gun off a shooter's hand. A civilian shooter, rip it off his body before he even pulls it on me. Civilians have this like fever dream of what it's like being. They have these thought. They have these like dreams or something. I'm gonna stop this and I'm gonna stop that. It's just not the case most times. See if we can pull back and grab another rip here. Right here, it's setting up. We'll see if we can grab one more. Yeah, like look at like gun trade. Any of you guys are ex-military know. If any of you are ex-soldiers, you know, you eat, sleep, and shit with your weapon. It's all day, 24 hours a day. 24 hours a day. Break it down, clean it, put it back together. Break it down, clean it, put it back together. Trigger discipline. When you say every day, I mean every fucking day. I mean like day in, day out, day in, day out. 24 hours a day, 24 hours a day. Some civilians trying to tell you they got this. You'd have to be practicing with your shit day in, day out, day in, day out. It's like this really weird thing, man. You break your weapon down blind. Put a scarf on somebody. That's the big difference. You got local police that don't even do that shit. You know, local police that go and they qualify once a year or once every 6 months. And you're expecting someone to be competent with a weapon. Be more afraid of you as a civilian shooting me while you're trying to kill a shooter. I would. Be trying to run from you. Be shooting guns, trying to put bullets through walls and shit. Watching movies thinking that a bullet doesn't go through a wall. Muzzle discipline. We're not even talking about police showing up and seeing you holding a gun. Shooting your kids through a wall or something crazy like. Seriously. Whole thing is insane. All right, trading 394.79. See if we get this nice cross. We got 395.10. We got the scene of the crime above. Up in here. We got a scene of the crime right here that got tagged out. And we got another scene of the crime above here into this close. Same shit as yesterday. Same stuff up in here. Yeah, it's my channel. I can do whatever I want. I can talk whatever I want. It's my channel. If you don't like it, go find your own channel. That's truth. Go find your own channel. Go make your own channel. Go make your own Twitter handle. Stay up all night long and find out how to make money. Go find your own channel. Go do your own thing, and I won't come visit you. You can talk stocks all day long. Seriously, you don't pay me. You don't subscribe. You donate for when you make money, so you start paying me every month and I'll shut up about it, okay? That's the deal. I start offering a subscription where you pay me $100 a month and I'll shut up. How about that? I'll keep it just on stocks. When that day comes, right, I'll never talk about politics ever again. Trust me, you're paying me not to talk about them. And then I'll shut up. Trust me, you can pay me to shut up. I got a price. And there's a donate button down there, PayPal. You want me to shut up about talking about that? Go down to the donate button, make a donation for $500 right now, and I'll stop talking about it. You can bet you can buy me for the day. And I'll shut up. Go right down there in that donate. If you can't do that, right? If you can't do that, don't tell me what to do in my stream. Come on, now give me this straight up higher. Yeah, it's funny because people are like, you're gonna lose a follower, and I'm like, there's like fucking 365 million people out here. I'd rather hang out with people that don't mind me ranting all day long. I don't need you. Like, we could bring another 10,000 or 5,000. I had 30,000 views this week. 30 fucking thousand. I'm sure if I stream another month, there'll be more people. Yeah, you can be in one. You want to be in a pay site? Come right down there. Pay $500 and I'll shut up for the day. There's your pay site right there. Done. Come on, baby. Vic's just kind of hanging out down here at 2062. It's weird. You got all kinds of places you can be out there, right? You have choice. Like we live in 2024. You can go to, I don't know, Mastodon. You can go to Truth Social. You can go to Twitter. You can go to Reddit. Wherever you want. You can go to StockTwits. It's probably like 20 live streams on YouTube, and you're like, "No, I'm gonna sit right here and yell at this guy." Fucking what? Go anywhere you want and enjoy yourself. Trading 394.70 right here. See if we can get a squeeze up into this bell. Watching the VIX in the background. It's kind of bottoming back here in the VIX, so I want to see what happens here. I'm going to take a walk around the market and just see what's going on here. Tesla not putting too much together right now. AMC looked beautiful today. Squeezed up nicely. GME, man, still, or that's GM. Hold on. GME did get a good squeeze on it. Not bad to GME crowd. BBY had their squeeze earlier, trying to get one last squeeze at the end of the day. Doesn't look like they're going to get it. Tesla just hobbling along right here, not seeing anything, any kind of like kick a stick at it or something to go up higher. These sellers are just like, you're not going anywhere. VIX bloodbath and SPY not showing it's coming. Hold on a second here. All right, I'm long again real quick here. SPY bloodbathing right now. Blackstone recovering. XLI recovering. KRE recovering a little bit. IWM with a recovery. Dollar General, man, did much better today. FRC closing. I think FRC closed the gap. I'm not sure. I think FRC closed the gap at this point. Might be looking for another trade there. Apple looking healthy into the close here. Everything's looking good and bullish here on my end. TLT finally sold back down to the depths of hell. That's nice to see. Goldman Sachs pumping. Yeah, Bank of America not doing too good here. Meta looking good into the close here. AGL tagged that 29 bucks or something a couple days ago. It's just been bloodbath. If you want something to short, AGL has a close or a gap to close down below at 26.97, 26.59. AGL. Schwab looking bullish into the close. XLK looking pumpy. XLY looking bullish too. XLP looking like dog shit still. USO looks like it's not done. It's got a gap to fill down below at 61.63 and at 60.76. INTC not doing much. I don't like HYG here at all. Man, HYG is just, with TLT selling off, HYG is just not joining the party at all. So this is probably all squeezing, not necessarily healthy market stuff. Vert is now just blasting off with a price target above $18.28 or so. Vert just right into the bell, just green bars all day long. Never ended today on Vert. Now trading 395, 394.94, excuse me. $395C is now trading 55 cents. We've got about 445,000 395 Ps. Got a big stack of puts at 395P, right? We probably don't want to see those close in the money into the close here, so we're going to try for a squeeze up
So the New Zealand Treasury to
Get
offer
these out of the money
1.3
here. These
billion
puts out of the
New
money.
Zealand
Maybe get up to
dollars of hedging in
396.
April.
Be nice to see this trade up into this close right here. So there's a huge stack of puts at 395p. So we'll see if we can trade 396 and get them out of the money.
This stream is sponsored by
It's like 50 cents left in them right now, 47 cents. Maybe we get them down to like
futures,
17
forex, and
cents,
stock
20
instruments.
cents.
Get a free trial at tickstrike.com.
I think it's more of the same tomorrow. I think tomorrow you guys, we have JPOW tomorrow at a luncheon at like 10 or 12. So you've got Vol coming in just for that tomorrow. This whole week is discussion time. This whole week is my whole focus this week with you guys is not day trading time. It's focus on end of quarter. You guys all trying to make money all time, every day, day in, day out. This is end of quarter, end of month. Quadruple, triple witching, however you want to call it, depending on the dates are now different. But this is end of quarter. This is a time for you to sit back and for me to sit back and digest the data that's coming out this week, the meetings that are coming out this week, the callers that are coming out in the market. So my main focus here is into Friday, consuming and digesting, positioning for the next quarter. When's that Jerome luncheon tomorrow? I don't know what time it's at. We got no news tomorrow. We got pending home sales at 10. And we got Barr testifying at 10 a.m. I forgot the Senate's got the second hearing tomorrow too. So we got Barr. We've got more of this bullshit tomorrow. Just another way to reset a short into tomorrow on the Senate hearings. Another way to reset a short, and then we've got Jerome Powell speaking tomorrow as well at a luncheon. You know, Bull's going to be hoping for Jerome Powell to come in tomorrow and try to take some of the squeeze, or not the squeeze, but the full levered short on this market off. So that's bound to add volatility to tomorrow's trade as well. And then on Thursday, we've got claims, continuing initial claims. We've got a bunch of speakers later in the afternoon. And then the big one for this week is on Friday. So we've got We got Senate hearings again tomorrow. We've got JPOW again tomorrow. And then we've got initial claims and continuing claims on Thursday. And then on Friday, we've got PCE. We were given a pass to PCE up until recently, where they're trying to point fingers and say, yeah, maybe it's not the cost that's passed along to consumers. Maybe it's where the production of goods and services is actually where the gouging is coming in, the inflation is coming in, it's being passed along to the consumer. Like finger pointing on PCE. So that's probably the biggest news we got coming in. That's 8:30 on Friday. Yeah, bullshit FRC. All that was a gap close, in my opinion. FRC had a gap close for that nice big squeeze we traded the other day at like 4 in the fucking morning. It's just a gap closure. That's all that is. My view. I think it's a very viable dip for FRC. I'm bullish on FRC here. 395 C's, baby. Send it up to 396. They're not going to close. I don't think they are. I don't think they're going to close 451,000 puts in the money right here. Maybe. I'm gambling that it's not. I'm gambling that those don't close in the money. Maybe. It's possible. If I made that trade 10 times, 9 times out of 10, they're not fucking closing in the money. So I'll take the L. I'll take the L on the one time. John Saporito saying, I can't get mowers. I just ordered 2 custom ones, took 2 years. They called me, told me they had just half my order. Damn. Flama Blanca saying, hey, Cap, can I get your thoughts on PYXS? Let's look at it. Pump and dump. I'm not going to talk about it. I refuse to. It's probably, I don't want to talk about it at all. No, I won't. I will not give an opinion on PY XS. I refuse to. It's pump and dump. I want nothing to do with pump and dumps. My assumption is that it's has a market cap of like small enough that I could influence the price of it. No. Apologize, brother. It's not you, Flama. It's that, do you know how this works? You might not know how this works. So how this works is I'll go in and I'll buy that ticker. I'll go in there and buy with size. And then I'll start telling people about it, that it should be bought. I'll make some videos about it. Maybe I'll take a nice fat, like 6 month out calls, maybe like 10,000 calls for like a penny or something. Make sure that like a Will Mead or somebody catches it on Twitter and they'll make a note of it. I'll pay somebody maybe to make a note of it. And then you come in to buy all that shit and I'm selling my calls into you. I'm making 3, 4, 5 pennies, 10 pennies on it. You're bag holding, nothing happens down the road. That's how you go to prison. I don't want to do it, man. Whoever is doing it, cool. You want a Lambo? You want a G2 or something, G4? Fuck yeah. Have at it. I'm not that guy. And it's not you, man. It's whoever's doing that in the background. I want nothing to do with it. And it's not that you can't make money. It's that some people get fucked. You could make money, Flama, but then there's somebody getting fucked at some point on that trade. And I want nothing to do with fucking people over for manipulating shit. That's why I trade the SPY with you guys. Mostly trade the SPY with you guys because I can't manipulate it. There's nothing that I'm going to do that's going to influence the price of SPY. That's why we make the joke that it's the SPY pump and dump room. Because it's not like we're influencing the SPY. There's just too much money. These are all banks. These are all hedge funds, banks. We're just trying to decipher what they're doing. Just trying to skim an old fat white guy's pocket. SPY pump room, SPY fluffer. Oh, maybe somebody does want to own the SPY in the close today. Maybe somebody wants to own. Maybe somebody wants to own. I don't know, a couple million shares of the SPY. Yeah, no, pump Silicon Valley Bank. Yeah, like any of that stuff on like TikTok or anything like that, man. I don't want nothing to do with it. I mean, I've traded that shit in the past, but like with you guys on a stream, like this shit's restreamed in blogs and shit. It's restreamed in a bunch of discords. It's restreamed on a service in Europe. Like, I just don't want anything to do with that stuff. I can't. The only person doing that prison time is me. And then like, hey, look at that guy. He just got busted. He's on the news now. Fuck that guy. Don't want anything to do with it. Gangster app made me do it. Yeah, man. I'm watching Natty right now. I've been bouncing in and out of Natty. I've been bouncing in and out of Natty. I've been eyeballing it all day long. Throw some lottos or something. Nothing on Natty yet, dude. Like, Natty's just torching. Boyle's getting wrecked too, right? $3:13 right now. 42 minutes left in the hour. See what the triggers are. See if they adjust them for right now or not. Still have that hourly above at 395.61. Right here. 395.61. Hourly triggers right here. Let me check on the other two and see where they are. 396.12. Right there. Weekly, daily trigger right there. So you can see them. Here's the monthly and hourly trigger into this close. Congrats to E-Trading Shorts, John L. and Raveology. Yeah, I'm long here. I'm long here, career low. I'm looking for a squeeze here. I'm looking for a nice fat squeeze trade. I ain't buying it. I got you E-Trading Shorts. I saw. I need what do we need? One more? I think we need one more. I need one more moderator for Discord. If anyone's interested in it. I'm trying to add some extra moderators. Yeah, you trading shorts? Shoot me a text, trading shorts. I want to make sure I've got you inside my phone here. Just ping me really quick. Young Ness, you'll be a mod. Can you get with Can you get inside the Discord? Let me put a Discord link in there. Oh, Fa Blanca saying LOL. You know you can just as easily be fired, right? Do you want that? Do you want to be like the world's shortest living mod? If anybody out there has any technical experience with Discords, you can let one of the admins know. We're trying to revamp it right now. Otherwise, I think it's gonna be I'm gonna have a ton of work to do in the background. Could one day turn into a position that would be paid. Oh, all right. I got an extra mod, I think. I think I might have filled it already. I might have filled it. Done. Took 5 seconds, got a text. Trying to revamp it. Yeah, it's a lot of work. It's like it's not a lot of work. It's you have to be able to get with somebody and say, "Can you do this? Can you do that? Can you do that? Can you do this?" Try to simplify things, try to streamline things. And we've been working on it in the background, and it's becoming, or it's turning into a lot of work that we need help with. Yeah, exactly. That's what it is. I wish I had. I was thinking about today, like, so when we came in to stream this morning, I was like, maybe I'll turn the stream on and do the work, and then just not be here talking to you guys, and just put the stream up. You guys could do the chat together. And I was gonna do the work in the background, but then I'm like, I gotta fucking stream. I was like, people want me on stream, so I was like, and then I started working on it last night, and then I actually passed out working on it in the middle of the night. I was like home alone, and I'm like just sitting there working on it, got the dogs with me. You know, it's just like me and the dogs, and it's like, boom, out cold, sleeping. Trade 395 and change right now. It's kind of like a standoff right here between, do we pin to the close, do we squeeze up into the end of the day, that kind of stuff. I'd really like to see us squeeze up and then maybe take a short into the after bell, like 4:15 or something into tomorrow. Chase Winter's making a great point right now. He's saying Micron reports after the bell. It's a proxy for NVIDIA, so we'll find out if this nonstop NVIDIA pump has anything behind it. Just kind of a yawn fest right now. 3:23, another 40 minutes, believe it or not, left. Like sitting here right now, I'm like, man, is it like 3:55 right now? We got 5 minutes. Like this, like looking at this chart, I'm like, yeah, it's 5. We got 5 minutes. Another 5 minutes, the market will be closed. Day will be over. I can go work for free for another. It's crazy. Can't even discuss some of this stuff. I'll go back into my closet, and then tomorrow I'll whip myself and say, "Stop talking politics and stream." Hopefully they'll go and bitch to somebody out there, and the people will come to the stream just because of it. What do they call that on Twitter when you do that shit? It's a follower thirst. You guys know what that means? You guys know what like follower thirst is? It's when you say something controversial and I piss you off. So you go out into some other social media space and you're like, fuck that guy. And what you don't realize is that 5 people saw, read, or heard you say that, so they come to the stream. Do you know that? People do that shit on Twitter all the time. It's follower farming, I guess. You guys know what that is? You stir the shit pot. And you think you're like, fuck that guy. So you make a paste. You're like raged. You're like rage posting. Tell all your buddies. You don't realize that you've just actually helped that person out rather than just ignoring them. Yeah, you know what I mean? Winky probably knows about this. You know who does a good job of talking about this on you know who does a good job at it? Is Quinn does a really good job at it. Quinn will build accounts that are like 70,000 followers in like a month or two, 100,000 followers in like a month. And what the crazy part about Quinn is, he's a good one. He does a really good job at it. So what he'll do is he'll post the opposite of what is actually happening. So if we're like mooning right now, he just posts that the market's going to burn. If we're going to the depths of hell, you say that the market's going to turn around and go up. Or especially like the Bitcoin crowd. Any of the like
Glenn says that Britain has not seen bank deposit outflows amid the recent banking turmoil, and says the UK banking system is very resilient, and he has confidence in London's bank regulators, and says the best thing government can do to keep the UK housing market stable is to bring inflation down and relieve pressure on interest rates, and says he has no immediate concerns about the UBS Credit Suisse deal execution, and we will work closely with regulators to monitor it.
So like if you're a fervent believer in something, like you just name them, right? Like Tesla, GME, AMC. If you're a Bitcoin crypto bro, right? Whether you're for or against
This
any of
stream
these
is
things,
sponsored by
if you just
To
come
The
out on the
Tick.
opposite side of it,
Free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
what's the other one that people do? They do the I saw our STT short seller STT made a comment. He was saying that you could do that people will sell, not sell, they follow. So like they'll follow as many people as they possibly can and then interact with them, and then they'll unfollow them once they're followed. That's another bullshit thing that people do on social media. So you go into like your notifications, people to follow. You follow people that don't follow you with low followers, and then you follow them, and then you unfollow them. You interact with them, and you unfollow them, which is kind of ruthless too. Yeah, best off you don't know how to find them. Yeah, Quinn will do really. Quinn will say something to make you have an emotional response, and you'll rage. You'll rage. You'll tell all your friends, and all your friends will come and start following him, and then he'll get 100,000 followers, then burn the account to the ground and do it all over again. It's kind of hilarious to watch. And people are believers too. They're like, people believe it. They're like, oh yeah, don't totally that guy that guy's this. I'm like, no, that guy's not that. Guy's trying to prove a point. Come back to retest this PT1 that we hit earlier. This is the low. This is the first low from this morning right here. Coming back to retest it again. Don't forget we've got the second low at PT2.
Early markets on close imbalance, sitting at 211 million to the buy side.
3:30 now, half an hour left until market close. Trading 394, liquidation break in the SPY right now. I'm watching some liquidation breaks too in the background, I should have mentioned earlier. VIX looking like it's bottoming here. We got VIX bottom back at 10:16 this morning. Another bottom on VIX at 11:31, and then VIX trying to make another run for it into this close. Deep in the money puts right now. 479,000 puts in the money at 395 right now. Oh, Jesus. I just lost the, I think I just lost the, I think I just lost the disco ball. Almost hit me in the head. Yeah, VIX. I'll show you the VIX here in the background. VIX trying to take a stab at it here. Here's VIX right here trying to squeeze up. Bottoming action, the VIX. This is where everybody's saying that VIX is going to 45 right now. The VIX trying to muscle and squeeze higher here. Get up there to that 23, 24. Right there, muscling up. VIX trying to take it into this close here. Tesla just kept grinding up, right, into its bell. Tesla ground up and hit 188.87. Just grinding up into its bell. Some weakness into the bell right now. VIX getting some life right now. Looks like everybody's being trained right now to take profit at the end of the day. KR, Kroger selling off into this bell. KR just heads up if you're short out there. KR has a gap to fill down below at 48. 48 and 48.40. And it keeps selling off down here. Just bloodbathing down into this bell. KR, Kroger, I believe. Dollar General looking weak into the bell as well. FRC got a dip buy down there at 12 bucks. Apple got a dip buy this afternoon, excuse me. You know, I should look at Etsy. I talked about Etsy a week ago and said I would revisit it. Yeah, so Etsy did get that sell down, huh? Etsy did take that sell down at 107. Or it tagged above at 116, and now it's at 107. So if you're whoever was asking about Etsy last week, it bounced right off of its daily at 116.24, and now it's trading below 106.53. Oh, that's not healthy for Etsy. Etsy's going the wrong way, right? Squeeze higher in the SPY now, trading 394.95. 25 minutes left. Trying to shake me out of my calls here. Trading 395. The big old reverse here. Let's see if we can squeeze it up into this bell. Just print me like 200% and I'll be happy. Fucking crap. Sorry for swearing. TLT came back from the dead for like 5 minutes. It was trading 104. So like TLT was trading 104. This is a good trade. So TLT, we started talking about TLT back in, I believe, January. And we said to buy, I still have the chart up here. We said to buy like $100. There was a second opportunity to buy $100 back on March 2nd. Maybe there'll be a third opportunity at some point to buy $100. Nice year-long investment, TLT. That's what Gundlach was pissed off about yesterday. He was panhandling on CNBC to print his high quality bonds. I wonder if anybody's short here getting squeezed right now. I bet you there's a bunch of shorts in here, puts holders getting squeezed for going into zeros now. Trading 395.14, squeezing higher. And you know what the crazy part is? I think I traded TLT once, but I haven't bought back in. And you know what I meant to do is buy actual physical TLT. Like I wanted to buy like 100 pack of TLT at like $100, and I still haven't done it. So I'm kind of pissy at myself for that. Damn, look at AGL Healthcare. AGL Healthcare, man, that's looking to get shorted into the ground, isn't it? There's another one for you, AGL. Ticker symbol. AGL's just looking for a bloodbath. AGL. Short it into the ground. Trading 395.17 right now. Just burr me, man. Just burr me into this close. Print me like 396, 396.50, any of that kind of stuff. 396.20. How about 390? How about 395.61? Print me that. Oh. Oh, Bears are drama queens. Southside drama queens. I'm thinking about measuring this here. I want to measure this this neckline. If we just printed like close the gap above at just below 410 on SPY, print like just gap close like 4081, 409. Just gap close, just rip some faces. Go up like 3% in a day. Throw shit tickets every day this week. There you go. Close 410, close 410, close 408, 409 on SPY. Close that fucking gap before the end of the month. Just close that 408. Close that gap on SPY above, please. RSPX. Yeah, so we found out we were going through the Discord today, or I was going through it last night. Winky was going through it today, the Discord. And we had some settings fucked up in the Discord. So we had misconfigured. If you're watching this broadcast right now, if you're watching this broadcast, or if you're in Discord, let the Discord know that we had ultimately this is my responsibility, it's my fault ultimately, but we had the server was misconfigured, so a bunch of people couldn't do anything in there. You want to the tune of 1,200. 1,200 people.
This stream is sponsored by TickStrike.
Pretty bad.
TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Yeah, it shouldn't be intentional. Yeah, it shouldn't be intentional. I guess if it is intentional, we'll find out that we fucked up. Maybe we fucked up. I guess we'll find out here shortly. I'll take the blame for that too. You just throw it on my shoulders. Yeah, I appreciate it. I'm not gonna claim that I'm the Discord. Well, I set it up, but Discord's kind of a thing where you have to devote a lot of time, or I feel like you do. I used to be in Discords a lot, so I was devoted a lot of time to it. But like doing live streaming all day, like I barely have enough time for Twitter these days. Like doing all of it at once is like you kind of have to pick your jam.
Canadian dollar touches its
Yeah, it looks like everybody can do whatever the fuck they want in Discord right now.
597.
So you want to get in there and shit post or do whatever you're doing, piss off the mods and the admins. Admins and mods are gonna come in here and start yelling at me. I'm over there turning on the fire hose. Psh, let her rip, Winky. Yeah, we're trying to work on all that stuff right now. Should be a better Discord here shortly. We are working on it. I promise you. Like work, like actual, like done. We did this, we did that. And you know what? If you have a time to help, let me know. Like Ross Walks, if you got time, man, just reach out to me. Hit me in my Gmail or something. Maybe you can help me do the work. Yeah, reach out. Always looking for help. I'm a pretty good, easygoing guy, so. Just trading 395 here. Just like this is like watching paint dry here. If I have to guess here, we're gonna get a creepy crawly up into the close. It's gonna be like one. You know how we do that bullshit? We creepy crawly up into the close. That's what I'm gambling on here. Like this kind of bullshit. That'll happen in the coming week or two. It's gonna take time. I want to make sure it's all right. I just need the time. It's taking me more time. Like just for me to be ready to do this is 8. But with this show and what it takes to be here, that's 8 hours a day, 10 hours a day minimum, 8 to 9 to 10 hours. Then I talk to people in the background for expansion that we're doing. And then the actual physical work, if I have to do it myself, it's another couple hours. I don't know if that's a wife, kids, like haven't eaten, haven't showered, haven't walked my dogs. So you're talking major time commitments right now. So it's just taking longer. What I should do is just shut the stream down for a week, or like this week. What I should do is like turn the stream off tomorrow, Friday, and just take the next 3 or 4 days and do some work so that I know that it's done right. Or maybe I could have somebody stand in for him. Maybe Winky would, maybe we could throw Winky on the spot under the bus and be like, hey, Winky, you want to do the stream tomorrow and Friday for me? You want to do a guest host tomorrow? Winky's awesome. We can put him on for 2 days. I appreciate all of you guys out there. I love all you guys out there. Everybody. Even if I pissed you off today, I love you too. Maybe Winky would, maybe we could put Winky on the stream tomorrow. He's probably like, he's like, don't throw me under the bus right now. Yeah, just reach out via email. And if you're banned and stuff like that, we're going to work on a bunch of stuff so that you get one more chance. And then if you ever want people to keep getting banned out there, never fear, there'll be a pay option at some point, so you can just pay, and I'll get on my hands and knees for you. YOLO, and I got some YOLO calls. Made a couple good trades today. Made one trade earlier today. Made another trade down here. Another trade over here. Now I got some YOLOs here into the bell. I'm expecting. I wanted to do a call spread down here, but didn't do that. So I'm expecting like some kind of a melt up.
A Fox reporter on Twitter says that First Republic is no longer for sale.
Oh, shit. What? Oh, dude, FRC is one of these things where you just don't look at it, huh? Oh, man, look at FRC into the close. Oh, no, FRC. Somebody just took a 2x4 and just fucking 2x4 at FRC. Somebody just took a baseball. I don't know. This is a Twitter report, so you can't really trust Twitter anymore. Hey, into this bell, let me ask you guys some questions out there. I got more controversial talk for you today. What do you guys think about Twitter, man? Like, I don't know what to think about Twitter right now. Like, Twitter's saying they're gonna. I think this ultimately rolls up into you're paying for Twitter one way or another. I think that's the ultimate goal. So I don't even think there'll be an option for you to not pay at some point. Let me know in the chat what you think, because I find it kind of hilarious. I don't know. I mean, I want to know I'm fascinated by what you think about where Twitter's going. I think there's like this really weird thing in the background, like, you know, it's like, well, they're gonna ban TikTok, so we'll start charging for Twitter, which is kind of bizarre. There's so many ways to monetize Twitter that's not like this. It's so bizarre. I think it's so bizarre to me. Like, there's so many ways for the monetize Twitter, and you take like kind of the stupidest way to monetize something. It's got to be the stupidest way. Like, for all the options to monetize Twitter, and that's the one you're choosing. The writing is really on the wall right now. And I think the other thing, the thing that kind of scared me yesterday was think about this tonight. Twitter is like a useful thing, right? People that want to get breaking news out used it, right? People from other countries use it. All these reasons that are good, like why you need to have Twitter, even if you're not on it, why you need to have access to it. If you're not hearing the news breaking on CNN or something or Fox News, you go to Twitter, right? It's where it comes out first.
Markets on close. Imbalance currently sitting at 470 million to the buy side. Just waiting for the final orders before we call it.
All kinds of crazy, like there's a reason for Twitter, right? Twitter's needed.
Markets on close.
But dude, when you turn into what it's coming into, it would be a no-brainer. And they got the code leaked, right? The code leaked publicly. Yeah, I guess if I had some money, I'd like that kind of money. I'd be like, oh yeah, we need to rebuild a new Twitter. We've seen like FARC go the way of the dark side. You know, you can see, oh yeah, baby. Oh, yeah, baby. Start printing for daddy. Start printing for daddy. Daddy's here. Go ahead. I'm green right now, baby. Keep on squeezing. Keep on squeezing for daddy. Trade 395.28. Squeeze it up there. Squeeze out every last one of these fucking bears. No offense, bears. I love you. Trade me 395.36. If you're sell side short, I knew that you were going to do this into the end of today. Trading 395.37 right now, 395.38. Oh, baby, print it for daddy. Take that money away from those bears sitting on those 501Cs. Well, not 501Cs, 395 Ps, excuse me. Yeah, like Mastodon's kind of bullshit, though, man.
And at 4 p.m.
Forget
Eastern
Mastodon.
Time, we do
I'm
get
not
committee
talking
annual
about, like,
budget.
I need to do this and I need to do that. And Mastodon to me is like one of those, it's like a room. Like, here, we're going to put you in there. Truth Social's the same way. Like, that's a room for you to lock you in. I'm talking about something like general public is going to use. Useful things are easy to use. Very easy to use. The general public can use it anywhere in the world. Don't have to learn anything. Oh, baby. 395.57 right now. Trading 62 cents. Ooh. Ooh. Oh. How's that feel? How's that feeling? FRC squeezing higher right now on news that it was not for sale anymore. Now trading 13.23, 13.24 in the background. FRC sending shorts backpedaling into this close. Shorts stumbling backwards, don't know what to do. Anybody shorting FRC is getting wrecked right now. Slapping the hourly trigger at 396.70. 395.70, my bad. The old squeeze into the bell here. Calling out those fake assers telling me that we're going to bleed into the bell. Trading 395.61. No problem taking the money and running here. No problem taking the money and running here. Do you call them out and say we're going to squeeze all the way up? We got 7 minutes left to find out right now. you got so Twitter is like used to be useful. It's like you kind of have to have it. You might not have had it, but for most people in the world, it was like something like it's like an iPhone. I got to have an iPhone. I got to have Twitter. I got to have this. I got to have that. I don't know. Like that kind of thing. Like people need it, use it. It's functional for free. Like it on its own, it functions. Might not be the best, but it functions. To an extent. And it was easily monetizable. Easily monetizable. No matter what anybody tells you, that shit's easily monetizable. On that scale, easily monetizable. And especially with sponsors and shit like that, right? Advertisers. So it does make you wonder. Twitter I guess the question is Twitter still a useful thing? And my other, the second part of that question would be, are you going to pay as it goes along? Like I pay $7 for this, and then I pay $8 for that, and then I pay $10 for this. There'll be price increases over the years. And I know that you might, or I might, but is everybody going to? Is there a tipping scale where it doesn't quite work, right? Is there like this tipping scale on information? Is there a tipping scale in finding?
At 4 p.m.
One of my
Eastern
favorite
Time, we
things
do
to
get
do?
Canadian annual budget.
I love following. Oh, dude, FRC is just squeezing out shorts right now. FRC just trading up 13.43, 13.41 right now. Shorts freaking out right now, panicking into the bell on FRC, going straight north right now. FRC is just, shorts are like, whoa, 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 whoa. But it brings up a big question about that. Like, or the question becomes, let's say you're a non-payer in this gray area. One of my favorite things to do is follow low count followers that produce content or make content, have no followers, because they're like posting all day long. And they usually have good content, even if they have low followers. So I'm like following them. Like, how do you discover new people? And one of the things I do is I'll search SPX. And I'll go down like the most recent posts, and if I see someone that's posted something I don't know, then I'm like, oh, the guy's only got 100 followers, but he's posting some great content here. Follow. And see what he posts every day, right? Have it in my feed. If I like it, I keep him. If I don't, I discard him as a follow. But I don't know if that stuff's still going to be there in this process. Or do you just get left behind as a new creator or dropping intel? Do you not get found to get traction? It's part of like the Twitter experience. You know? Although I think he could have done it right with like the Twitter Blue could have been done right with like extra perks. Like, hey, you get this extra shit. But like the base case for what works for Twitter just maintains everybody gets that for free. Maybe have like Twitter fucking Blue that's like, oh, here's HD video as much as you want. Here's this, whatever you want. How do you get, like, I understand the idea behind the bots and the voting. Like, that only matters to like Elon Musk. For you and I, if you and I are running a poll, there's a bunch of people that won't be able to take that poll with you, right? There'll probably workarounds on polling as well with outside web. Matter of fact, if you were smart, you'd create a website for polling for Twitter where you just click on it to take you to an exterior link and then throw some ads on that fucking website. You'd probably make $100,000 a year doing just that. So ways to circumvent the polling would be huge. Now squeezing up 395.54 right now. FRC just squeezing up into the bell. Trading $13.47 right now. Closed the gap on FRC. Twitter drop on news earlier. It got whacked there for a minute, but now it's just blasting. Trading 13.40 into this bell, just crawling up the wall here. We got SPY trying to crawl up the wall here as well into the bell. Just a few minutes left right now. 3:58, 2 minutes left. If you wanted to short tomorrow, this is one of those times to think about it. Either right now or after the bell. Maybe you let, I believe, Micron report and then make a decision as to what you're going to do. If you want to see some kind of like more volatility tomorrow. Here's your gift here at the end of the day. Thanks, Legend. Appreciate that. Well, my assumption here is that it's taken as good news as they don't need to be. The point here would be that they're not. I guess the point here is maybe it's good news because they're not going to be bought for a dime on the dollar or something. 1 minute left now to trade the market. We also have some earnings coming out after the closing bell. Be careful of that impacting a push up higher in the SPY. So if you see an initial reaction on the high, maybe you're trying to get some puts for tomorrow in the market. Trading 39.565. All puts, shorts blown out right now, I'm assuming. Or I guess there's one guy out there that's like, I shorted 420. And I'm never going to close them. Now trading 395.69 into the bell, just squeezing higher into this close right now. Squeeze them up there, baby. 395.70. Tesla, baby. Tesla. Squeezing up into the bell to 189.37 on Tesla. Tesla, baby. Oh, look at the SPY smashing up. SPY now trading 39.585 after the bell. Woo, baby. There's the daily and weekly trigger above. Sorry, Nino. Thank you for saying something, Nino. You guys all have a wonderful afternoon. MU, that's stuff. Yeah, watch MU after the bell here. If you're looking for a short into tomorrow, right, look for this daily trigger to grab one. If you wanted to grab some 0 to 8 puts for tomorrow, if you're like still bearish and shit, at like 4:50, you know what one of the coolest parts of ER season is? You just trade the 15 minutes on the Qs or the SPY, and then you get out. You don't hold into tomorrow. You just take the money and run. CSM Jazz is like, oh! He's like, we're closing right where we opened. Thanks, Tommy. I want to say something to Vortec908. Thank you for following on Twitch today. Legend X22X used 500 bits today. He did 100 shares. Thank you. Tornoxorus followed on Twitch. Thank you for following. Dag418 followed on Twitch. Busta followed on Twitch. Epez12 followed on Twitch and used 100 bits for printing, baby. Tendies 2020. You guys making money here or what? You guys fade me into this close? I hope you didn't. Oh, trading up to the weekly and daily trigger right now. Trading 396.14. Woo, baby. I think they're gonna do this creepy crawly thing up into the bell today. I think we're getting that creepy crawly thing. They're trying to shake me out down here, guys. They're not gonna do it, and we're gonna squeeze up. 395 C's now trading $1.09. $1.09 on 395 C's. Yar! Nick S. Bearish. I love you, Nick. You guys have a great afternoon. Thanks for joining me today. If I hurt any of your feelings today, get over it. We're here every single day. Most of the time, we never talk politics around here. I mean, like 99% of the time. So if you hear me talk politics every once in a while, just get the fuck over it. I'm here with you fucking, I don't know, 30 hours a week or something insane like that. You expect me to just talk market with you all day long? Sitting in a room alone. Come on. You guys take life too seriously sometimes. I'll see you guys tomorrow at 9:30, okay? We got 2 more days. Well, we got 2 more days of this left. 2 more of this crazy end of month stuff where we actually go nowhere. Oh, we have 3 more days of this. Fuck. We have 3 more fucking days of this bullshit. Feels like Friday already. I'll see you guys tomorrow. Yeah, I'll see y'all. Yeah, man. Don't get too pissed off. Shake that shit off. Get out of the house. Go for a walk or something. Yeah, home alone, baby. I'll see all of you guys tomorrow. Look at that SPY just squeezing right now. Was that expected? Did your Furu tell you we're going to squeeze into the bell today or not?